Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Well, good morning. Good morning, everybody. Coach Alex, how you doing, boss?
Very good, thanks, mate. What about yourself?
Oh, it's another beautiful day in paradise over here in the States. How about Aussie? How's it going down under?
It is freezing cold. It is a thing, but it doesn't feel like that. I'm ready to start coming through, that's for sure.
Yeah. Oh, that's right. Your spring is about to start, isn't it? I believe so.
Yeah. Just started 8 days ago.
Nice. Yeah, it's funny. I never really paid that much attention to the weather differences between the north and the south hemispheres until a few years ago when I realized, oh yeah, they have winter when we have summer and vice versa. So yeah, it's just a interesting dynamic with the way the earth is. So that was my own
that
ignorance. But good deal. Well, good morning, good evening, chat, wherever you are from. Just getting started. I think we're going to have Coach James on here in a few, I believe. So let's see what we got. Let me see. Double check my notes here. Okay, so it sounds like it's you and I, Alex, for the time being. So
easy done.
Well,
easy done.
Yeah, we can make it work. How was your? How would you say your trading week ended up last week?
Actually, the week off. It was my girlfriend's anniversary. We went up into connected from the world, chilled out. There was no internet connection up there, so just had a nice time relaxing. So my trading week was dead. What about yourself?
It was a week long of a reset. Oh, that's awesome to hear. It's great to get away from the screen from time to time. That was essentially my Saturday. Yeah, the week last week was fine. It went okay. Yeah, and I'm kind of the same way. On Saturdays, I have to unplug and get away from all the laptops, the phones, all that, just to kind of reset. So, yeah, my girlfriend and I, we ended up going on a walk at a walking trail kind of near my house. There's a nice little lake there, and it's got a couple big walking trails. We usually take the shorter one because it's about 2.5 miles of a walk to get around it as it is. So, yeah, it was just nice walking through there, nice and quiet, under the canopy of the leaves, which here in the States are going to start turning colors probably here in the next 3 weeks and start falling. And then it's our turn for winter. So, but yeah, it was just great to get away. Went out and tried a nice barbecue joint, and they had loaded mac and cheese with brisket burn ends inside of it. So I had to try that.
Yum.
Yeah, and it was needless to say, I had a nice little food coma thereafter. Finish out the evening. Fat and happy, and just chilled watching movies. So that's my idea of getting away from everything and unplugging, just spending time with her. And yeah, talking the future. It's just a
Beautiful, man.
really cool thing to do to finish out the week. Get away, as far as getting off all the charts and the colors and the lines and the data and the price points. So yeah, that one day is all I need to get rolling on a Sunday here in the States, since the market opens 4 p.m. my time, 4 p.m. Central Daylight Time, which will be Central Standard Time here again shortly. But yeah, we had quite the NFP report on Friday, so everything kind of changed on my top setups. What's your takeaway or initial takeaway of the NFP, the non-farm payroll? Any thoughts on that at all here in the States?
Honestly, I just love watching it. I never know what's going to happen. You always know it's the big event, isn't it? That you sit there. It's kind of just like the how should I put this? It's like sporting event almost, where you know what happened. So I just love to sit back, relax, and just go, how is the market going to explode today? And I'm very glad I'm not the trader who traded news. That's all I'll say about the NFP.
Yeah. Well, yeah, I call it the popcorn trade of the day. Whenever the NFP comes out, or an interest rate decision, or a big report like that, it's just where you want to get a bowl of popcorn, put on your favorite chart to the 1 minute time frame, and just take the mouse and put it around the back side of the computer so that you don't get tempted into buying or selling. Eat your popcorn and just watch the show, right? Just like an earthquake telemetry machine.
Exactly right.
Yeah, that's the popcorn trade of the day. Stay the hell away from the buy and sell button and just watch and study price action. So, yeah, NFP is one of my favorite ones to do that with. I'll just turn it on to the dollar yen or even gold right now, since gold is still number one on my watch list, and just kind of sitting and watch the show, because you can see on there where people are blowing accounts. You can see where people are lucking out and making a big trade and thinking they know everything. But then they try and do that a second time or a third time in a row, and they turn around and blow their accounts. So, yeah, it's always advised. I always advise, and I think all the coaches pretty much advise, just like what you were saying. Just stay the heck away from the buy sell button. Let the volatility, let the volume kind of come back to normal. Pick a trend and then latch on at that point. So yeah, needless to say, I was flat going into that. I had a couple trades during Forex Fire on Friday morning, and yeah, I had one in a slight drawdown, and I had one in a slight profit. So I just got the heck out about 15 minutes prior. It's just not worth it, and just let the rest of the day do its thing. So, but yeah, it kind of did a lot of shifting of the top setups, like I mentioned, and my list is looking completely different from last week's. So back end, if you can, just pop up my chart whenever you get a chance. And Alex, I usually like to start Mondays off by kind of going through the COT report, what the big banks and institutions bought and sold last week. Now, just as a reminder for everybody in the chat, the COT report is only accurate as of the previous Tuesday. So it's a report that comes out on Friday. So it came out Friday, towards the end of my intraday session. Usually comes out around 3:30, 4 o'clock Central Time here in the U.S., about 5 o'clock New York time. But it's accurate as of Tuesday, so 3 days prior until the Tuesday prior to that. So just think of it as when that report's released, it's automatically 3 to 10 days old, if that makes sense. That's the bulk of the buying and selling from the big banks and institutions. So it's a lagging indicator, but it's a very important indicator nevertheless, because the big banks and institutions, they're the ones taking all of our retail money, right? In general. So, whenever they latch on to something, I like to watch and try to ride the coattails of them. So, but yeah, as far as that COT report, I actually have it on my gold chart over here. Oh wait, that's not it. Where did I put my COT report? Oh, it's right here. So yeah, so this first report is kind of the overall positioning And Alex, if you by the way, if you have a trade or something, just don't feel free to interrupt me, okay? If you find something you want to jump into.
Easy.
I actually just closed out a trade back end. I'll update that here in a moment on one that I took last night and had a really nice profit to wake up to. So I'll get that updated in a moment. But yeah, as far as the big banks and institutions, well, this is the overall positioning. So clearly, you see over here on the right-hand side, gold and silver, number 1 and number 2. So the blue is notating their long positions, and the red is kind of denoting their shorts. So gold and silver are far and away the top assets right now, and all the currencies are underneath that. So the closest thing we have would be the euro. I mean, they're long around, what is that, about 65% long, with the remaining 35% short. So that's currently, now these are longer term position traders. Maybe they are trading weeks to months, right? Or maybe even years on some of this stuff. So just keep that in mind. I mean, obviously most all of us are short-term traders. So this doesn't really make a huge difference to us like it does a position trader. But it's still nice to see overall where are they at. So yeah, gold, silver, and then as far as currencies go, looks like the Canada dollar is still their most heavily shorted. So 50%, which is right around there, is obviously kind of the baseline, right? If they're over 50, they're net long. If they're under 50, they're net short. So just gives you kind of a 30,000 foot view of where the banks are. So that's the report that on the position side. And then if we flip over here to the week-to-week differences, the week-to-week change, this is the only thing I care about. This is the only thing shorter-term traders care about. I should say it's the most important thing, right? So if we looked at the week-to-week changes, silver was the biggest winner. So they increased their longs by 4.25%. And then gold, they had a modest increase as well at 0.88%. So yeah, they're still clearly buying the metals. I mean, they added 6,200. I don't have my glasses on. Yeah, 6,200 long contracts. And then they also got rid of 3,200 short contracts. So that's why they had quite the increase on their net change percentage. And then as far as gold goes, let's see here. They added a bunch. They added 40,000 long contracts. Now, this is the futures market, just so everybody understands for the context. So yeah, gold was a huge increase, 40,000 contracts on the long side. And then they did add a very modest amount of shorts, 4,800 it looks like. Okay, so you average all that out, considering gold is, I mean, they've got 315,000 contracts long total to only 66,000 short. And that's why we get the 0.88% net change. So yeah, I mean, nothing has really changed on this report over the last several weeks. They've just been steadily buying gold, steadily buying silver. And then as far as currencies go, Swiss franc was the biggest winner on that at 3.15% increase of their longs. And then the Aussie dollar right behind it, 2.73%. So that would be the big winners on the currencies. And then the big losers on the currency would be really just the two for the yen and the Canada dollar. They did increase they added 3.18% shorts net change. And then the Canada dollar was minus 2.32%. So those were the two that they weren't the most fond of, at least last week. Now, this data, keep in mind, everybody, this is updated before the NFP report came out on Friday. So that's another piece of context that we want to look at, or that I want to look at for sure. That changed a lot. I said the same thing last Monday. All right. Because last Monday we had the report come out, which was obviously accurate before Friday's. What was that? Let me go look at my chart. Let me go look at my reports here. Or 2 weeks ago, I should say, when we had what report was that? Fed Chair Powell. I'm sorry, Fed Chair Powell, when he was speaking. Right, Fed Chair Powell spoke, and everything changed dramatically the next week. Same thing with NFP. This is definitely going to affect it. So yeah, just another piece of context to keep in mind. Let me go back to this week on my chart here. Okay, perfect. And then Bitcoin traders looks like they got rid of 58.58% on their long. Well, they're net short actually, 23,000 contracts to 22,000 long. So 23,000 short, 22,000 long. So pretty much middle of the road for Bitcoin. That's really not of interest. Anything that's below 2%, but higher than minus 2%, so that 4% range, that's just really kind of almost unchanged in my opinion. I only really care about the more extremes. So yeah, and if we look at the indices, then the Nasdaq, you can see right there, got sold off a lot, minus 7.25% towards their shorts. So they added 10,000 short contracts, and then they got rid of 9,900 long contracts. So that's a 19,000, 19,000 basically net short. So yeah, they're kind of doing a little bit of selling now. And then the Dow is right above it, minus 5.5%. So that's two major U.S. indices that they went net short. And then the Nikkei in Japan is right above it at minus 4.25%. So they did add a little bit on the Russell, 1.93%. Again, that's kind of under that 2% threshold. It's almost, pretty similar to unchanged. And then the SPX 1.5% gain. So they added longs on two, but they added shorts on the other two, as far as the main U.S. indices. So yeah, quite the sell-off. So does that mean we're at the top of potentially rounding up to the top of a long-term range? Maybe we get a little bit of a pullback, right? Maybe try to find some support a little bit lower. We'll have to find out. I definitely am not a buyer of indices right here. I can tell you that. They're pretty well neutral on my top setups anyway, so that's another reason that I'm not too interested in it. Let me just double check something here. Okay, good deal.
Might interrupt you, mate. I've got a trade on my side here. It's moved really quickly, so maybe back we could swap it around. Shouldn't be a problem. I don't believe so. Let's just see when it works. Okay, awesome. Just making sure we're all good there. Okay, so apologies again, Tiger, for doing that, but we are here, and this is on. This is for a gold trade. This is for a buy. So it's moved incredibly quickly. I only just managed to catch it myself, but there is definitely a potential for re-entries here. We have not gone to our 1-to-1 yet, which is going to be here. So we haven't hit it, so we can always go for a re-entry. So anywhere around this point. So we love for it to back to where we're, but our target is basically right up here. Now, why our target is this? It's 50% of the range. So we were talking about not last week, but the week before. We've got the range, and it basically sits from here, which is my 1700. So that's 5 p.m. So that was an hour before we started. It's basically just from the bottom all the way to the top. Now, this goes until 5:30. So half an hour time. That's our range. And we can see it's quite expensive because we've had such a massive movement, really back end of Asia. This is extremely, extremely bullish. And in fact, it's just taking off right now. So unfortunately for us, it has gone and hit our 1-to-1 level. So we're in it now, setting our stop losses to break even. And we are just shooting up towards our target here. Now, as I said, our target, this area from here to here, which we've hit. So that's done. So if we would just be stopping trade. Obviously, we'd be hopping out and saying, okay, cool. The trade finished and closed. Nice little win there at the start of it. Good. Because last time we were here on Monday, I had one loser and one break even. So it's nice to start with that little winner through. But again, hopefully the market will let me finish here. The market, surely you're not going to do anything. But This area here, you will note, is the same size as this half here. That's effectively we've gone for from our tree. And if I move this out of the way now and I take this off my little position size calculator tool here, you can actually see on this Lux Algo ORB. So if I take it off, it disappears. If I bring it back on again, there it is. It gives me that little green line that says, hey, this is where you should be targeting. We always go for that. Yeah. If I'd entered here, I would be going for this. If I entered here, I'd still be going for there. It can mess up the risk to reward, but as I said last time, guys, I've got an 80% win rate, but my risk to reward is a positive one. It's a negative one. I go for less than your to one. I might go for a 0.5. I might go for a 0.8. Obviously, in this sort of very one, we got really well or underneath the last low, but that couldn't. The last low is down here, right? So those are just the rules for opting in. I'll catch that fast enough for you guys. I do apologize about that, but I will be very hawkish from here on in, making sure that if something does come up, in fact, we can hop literally right now, the one that's just come through. So here we go. Here we go. There's another trade. You'd be hopping in for you. Now we're only going for a very, very small one, and we're actually at the perfect area to hop. This is an incredibly small trade. So if you guys want to literally hop in right now, said to yourself, oh, but we just won one, even though I know you guys didn't. We just won one. Let's hop in. This is what we would be looking at through here. Your entry here, your stop's there, and I take profit literally be right there. So, yes, hopefully we can win it. It comes down. Again, note that this half of your range from here to here is exactly where we should be going. So it's that exact height and got not really anything for our Euro USD at this moment. We're looking for it to come back some sort of a VWAP, which we're basically right on here. But we're always looking to break above the tops of these Bollinger Bands. That's very unlikely to happen at this current point in time. You could see it happen here, and ours is so low at this point here that it doesn't really matter. And market is just teasing us, right? Saying, oh, we're close. We're still doing it. Technically, we're not going for even a 1-to-1 here, so there is no point in putting it at break even. So we're just going to this one now to see what happens. Comes down and hits it. Amazing. If it doesn't, no worries. We'll just have to with that. But that's basically it. Now we're just going to be waiting and seeing what's going to happen and just monitoring the trade.
That's awesome. That's as quick as it gets right there. I would say this. Yeah. Before a trade sets up, just go ahead and let me know. That way we can see the
absolutely.
Full thing if that helps. Yeah. You can interrupt me as many times as you need. And we got 4 hours, by the way. So we're gonna be here for a while. Chat. I want to say hello to chat real quick. London bells just rang. What's the move? That's our poll question. All right. Breakout sprint, slow grind, fake out traps, or snoozy open. What you think? So definitely let us know your thoughts, your answer on that. And that way we can get a little bit of a sentiment of what everybody's thinking. But hello, Anthony. Hello, SP King. And hello, Richie Trade so far in the chart or in the chat. Good morning, good morning, good morning. We got a lot of good stuff happening today. But if you guys and gals have any thoughts on any charts or any piece of news that we had of late, technical, fundamental, sentiment analysis, anything of that nature, any questions, let us know in the chat. But otherwise, we'll definitely, or at least I know I'll be kind of going into a deep dive on all this stuff. So if there's anything you guys and gals want to hear about before I get to it, just let us know, because it looks like it's going to be 2 of us today. So we're gonna enlist the help of the chat to keep us busy. All right. So any thoughts, any questions, anything of that nature, let us know, and we'll definitely get to it. I'm more of a higher time frame trader. I know Alex, as you just saw, is obviously more of a shorter term trader. We're both on the Forex market. So I think that's primarily what you do. Is that right, Alex? Or do you kind of dabble in indices or gold, silver? Well, yeah, you just did a gold trade. So
yeah, you're exactly right. I did do a gold trade. I mean, I do love
that question
the oil and gold. Yeah, but Euro USD, something that I love through here. Might even do some sort of Great British Pound JPY. This is what I'll have on my screen now. I've got another one to the other side of me, and that will have some other trades going through. So if it pops up, I'll be able to chuck it on the charts here. I'll be able to have a look at it. But yeah, I do love Forex primarily. That is the aim of the game.
That's right.
We're about to get taken out here. We're close. In fact, spreads probably already got a lot of you. If you have set your, I'll just hover over it. So technically, I'm not at this point.
Double top and drop on it. Annually. Come on, Mark. Double top
and there we go. One win, one you go. It's okay. We've made more on this trade losing over here. So we're still in the positive for today, but that's good. And of course, what does it do? It starts to drop all the way down. But, that's how the market goes sometimes. Can't do anything about it. It goes, I'm gonna just take your stop loss out and then you turn around. Watch me turn around.
Look at that. It almost double topped. It just caught it said Alex's stop loss is right here. I'm gonna go grab Alex's stop loss and then I'm gonna drop. All right, that's the market. The market watches us, right? I'm just kidding, guys and gals. But no, that's just the name of the game, right? Sometimes we get a liquidity sweep or stop hunt, whatever you want to call it, and then the market says, "Oh, you were right, by the way. I just thought I'd play with you." So that's just the way it works sometimes.
Absolutely. Every so often.
Yeah. Good deal. Good deal. Well, 2 trades in the first 30 minutes. There we go. Sweet. Yeah.
Back over to you, Tiger. I don't think I'm getting anything in the next couple of minutes. I think I'll be all good if you want to switch back over to what you were going on about.
Yeah, I'll take a quick look at the trade I got into last night after, well, right at the end of the market open show that we did. We always, as always, anybody watching us here on Forex Fire, just so you know, typically Coach Michael and I, we open up the trading week at 5:45 p.m. New York City time, so Eastern Standard Time. And we just do a quick 1-hour show from 5:45 to 6:45. We do that to okay. So, yeah, we do that just to kind of I usually go over my COT reports, top setups, things of that nature before my Coach Michael gets into the quiet market show a couple hours thereafter. So just in case you guys and gals did not know that, maybe you only tune into Forex Fire, maybe you just tune into the weekly shows. Just keep in mind that we always do that market open show on Sundays beforehand. So, yeah, let me just send a quick message. So it looks like we're going to jump into some news here in just a moment, chat. So, yeah, any thoughts or questions you have, any charts or anything of that nature, start formulating something to throw in there and we can check it out. But, yeah, after we do this news piece real quick, yeah, I'll kind of go over my Aussie dollar, US dollar trade, and then some more top setups and just some overall fundamental analysis to look at the markets from a 30,000 foot view. So yeah, back end, I'm ready to roll. If you want to go ahead and flip on over to the news. All right, folks, welcome back to Forex Fire. Strap in because we've got a lot to unpack from the wild weekend and a fresh week ahead. It's like trying to summarize a season of a political drama an economic thriller, and a central bank soap opera all before the first cup of coffee. So let's get into it. Starting in Japan, where political chaos is the name of the game, Prime Minister Shigeru Ishiba threw in the towel over the weekend, resigning and kicking off an emergency leadership race. It's like your favorite show's main character just quit, and now everyone's wondering what the next plot twist will be. This political uncertainty is throwing a bit of a wet blanket on the Japanese yen at the start of the week, as investors worry it might temporarily put the brakes on the Bank of Japan's plan to finally normalize policy and hike rates. But it's not all doom and gloom for the Japanese economy. We've got a revised GDP report that was like getting a test back and finding out you scored even higher than you thought. The economy grew at an annualized rate of 2.2% in the second quarter, a huge jump from the initial 1% reading. Combined with data showing real wages actually turned positive for the first time in 7 months, it's giving the yen a little bit of a backbone, which is, of course, preventing a complete meltdown. The USD JPY currency pair is doing a delicate dance around that key 200-day moving average, with traders watching to see if it can break above 149. Now let's hop over here to the US, United States, where the jobs report on Friday was, well, let's just say it was not the blockbuster hit everyone was hoping for. It was more like a movie with a huge budget and terrible reviews. The economy over here added a paltry 22,000 jobs in August, and to make matters worse, we found out we actually lost jobs back in June. So that, of course, was a humongous revision we had in June. I believe off the top of my head, we were forecasting 100,000 jobs, 110,000. The actual number was 147,000, but then it got revised all the way down to like 12,000. So that's sick. That's disgusting. But anyway, that's just the way it was. That's the first monthly decline since the dark days of 2020. Now, the unemployment rate also ticked up to 4.3%. So this week data has traders absolutely convinced that the Fed is going to cut rates, and not just once. The market is now pricing in a cut next week, and there's even chatter about a jumbo 50 basis point cut. Some are betting we could see 3 cuts before New Year's Day. This has put a massive weight on the U.S. dollar, which is struggling to find any friends. It's like the dollar showed up to the party and everyone else has already left. And it's 90% that will have a 25 basis point cut on the CME FedWatch tool, and 10% think that we're going to drop the 50 basis points. Okay, so just a little context, and that just changed over the last few days. But yeah, this dollar weakness is like a rising tide lifting all other boats. The New Zealand dollar is approaching 3-week highs, getting an extra boost from its main trading partner, China, which reported a massive trade surplus. The Aussie dollar is also flexing, holding steady after its own strong trade and GDP data last week reduced bets on any near-term rate cuts from the RBA, Royal Bank of Australia. And even the Canadian dollar is feeling the impact. Though it got a punch to the gut from its own awful jobs report on Friday, Canada lost a whopping 65,000 jobs, pushing the unemployment rate up to 7.1%. That is its highest level since 2016, outside of the pandemic, that is. Unsurprisingly, this has sent the USD-CAD currency pair climbing towards the 1.383 level. Over in Europe, we've got our own political drama brewing. All eyes are on France, where Prime Minister François Bayrou is facing a confidence vote today that he is widely expected to lose. It's like waiting for the results of a reality TV show elimination. If the government falls, it could lead to a snap election, creating more uncertainty for the Eurozone's second largest economy. This is capping the euro's gains for now, with the euro-USD currency pair hovering around the 1.171 level. Later in the week, the ECB is expected to hold rates steady, which should provide some underlying support. And what about everyone's favorite shiny metal? Gold is taking a little bit of a breather after its epic record-setting run last week, consolidating just below that monumental $3,600 per troy ounce level. The weaker dollar and those soaring Fed rate cut bets are the fundamental drivers keeping the bullion bulls in charge, even if things look a little bit overbought in the short term. Silver is also pulling back slightly, trading around the $40.65 level, but the same supporting dynamics are in play. So what's on the docket for today? Well, it's a bit of calm before the storm. The main events are the political headlines out of France and Japan. But traders are already looking ahead to the main events later this week, which of course is the U.S. Producer Price Index, the PPI report, on Wednesday, and the Consumer Price Index, CPI, report on Thursday. These inflation prints will be absolutely critical in either confirming or confusing those Fed rate cut expectations. It's going to be a week where the data doesn't just speak, it shouts. So that's the wrap, everyone. A mix of political resignations, disappointing job numbers, and central banks playing a high-stakes game of will they or won't they with interest rates. So remember, in this market, the only constant is change and sometimes a little bit of chaos. So thanks for tuning in to Forex Fire. We'll get back to the charts in 2 seconds. I'm just going to quickly go over the economic calendar. No red folder or orange folder events today. One orange folder event tomorrow on Tuesday, which is the Swiss National Bank Chairman Schlegel flapping his lips. But the first red event we have is, again, that PPI on Wednesday at 8:30 a.m. New York time. We'll have a couple shows between now and then to elaborate further on it. So with that, we'll get back to some charts. And see you in a second. Oh yeah. Oh yeah. Oh yeah. Good stuff, man. Yeah, I was kind of. It's funny, when I was writing up my news article this morning, when I was looking at the Fed Watch tool, seeing that 10%, thinking that we're going to drop 50 basis points. So that was kind of a surprise to see jump on. Okay, so it's 9.9% now. 90.1% that we're just going to drop the 25 basis points. So they've taken off the unchanged bar altogether. So it's a certainty now. It's just a matter of if we're going to get the 25 or the 50 basis point cut. So interesting times. It's funny how a couple pieces of data can change all those expectations. Oh, okay. Okay, so yeah, it looks like Alex is restarting his internet. So he will be back in just a moment. But I'm going to go ahead, ladies and gents, and take a look at the trade that I finished out just a little while ago, actually. Let me just go over here and double check. What are thoughts on GJ? Okay, Richie wants to ask about the British pound yen currency pair. So we'll take a look at that. It looks like a mess. I love it. Yeah, Mike, Coach Alex, he's got to restart his internet, so he'll be back shortly. Yep, network. Got to love technology, right? All these advancements, and we still have technology issues. Probably will be the same 100 years from now, right? No matter. So, but yeah, let's take a quick look. You know what? Let's just pop on over real quick to pound yen, Richie. We'll take a quick look at that, and then I'll jump back to my winning trade. Let's go pull up pound yen. All right, so here's pound yen. Now, as always, ladies and gents, before I even look at the chart, the first thing I want to look at is my top setups. So I actually have them over here on my gold chart. So I'm just going to flip to gold just for a second, because that is where I have my goodies. And take a look at my top setups. Now, I'm here in a little bit, once we get Alex back, I'll go back over all the data as far as how we get to this point. But just taking a look over here, I don't see pound yen. Pound yen right here. So pound yen, if we're looking at strictly the economic data, so all the recent economic calendar releases added in with, so this is fundamental analysis, and then look at the technical analysis and the sentiment analysis. You add all that together, okay, we've got a score of an 8. So a bullish score of an 8. So bullish is 5 or higher. So if we look right here at the bottom, that's a 5. 5 or higher is a bullish reading based off of the economic data coupled with the sentiment analysis, right? The technical analysis part, I don't really pay as much attention to, right? Because I can look at that on a chart. But really, the main things I care about is the economic data and then the sentiment. So, but I like to look at everything as a collective whole, because any one report by itself, while it may move markets, it very strongly in one direction, it may reverse if the prevailing headwinds are going the opposite way, right? So that's something else I can kind of talk about. How do I use a report to get me into an opposite trade, right? It's actually pretty cool. So, but yeah, anyway, let's go back to that. So pound yen. So what we're looking at is the COT report gave it a score of 0. So 0 just simply means unchanged. When I was showing the COT report earlier, okay, anything that was in that +2 to -2 range, that 4% window, it's just more so unchanged. They didn't strongly buy or strongly sell those currencies. So when you add the pound and the yen together, that's why it's giving me a 0. So basically, it just means it's not helping my bullish cause or my bearish cause. It's just neutral. So I just skip it. We look at the retail sentiment. It's giving me a score of a 1. Well, that means that the average retail trader sitting on our laptop, our computer at home, our smartphone, whatever you trade from, they're net short. That's why that's giving me a +1 for a bullish sentiment, a bullish bias, right? If the average, it's a sad stat, but that's just the way it is. It's an indicator, right? If everybody's short, the big banks typically like to take that short liquidity to fuel their long trades, and vice versa. If the retail trader was net long, like they are down here, okay, on the Euro Aussie dollar, the CAD Swiss, the Euro Swiss, the pound dollar, if they're net long, because this is a contrarian signal, the big banks like to take that liquidity, okay, from their stop losses to fuel their short sell orders. So it's just kind of a dog-eat-dog world. It's a shark-infested waters, right? That's trading for you. So we don't try to fight it. We just try to join it, right? If you can't beat them, join them. That's kind of the way it is, by understanding all this data, understanding what the banks and institutions are doing. But yeah, going back to pound yen, so yeah, we're getting a positive rating on that. So that's a +1. Seasonality. So pound yen for this month is typically down. So that's one of the few items that are going against this bullish narrative. Trend +2, and they typically go off the daily time frame. So obviously it's an uptrend, so that's good. No reading on the GDP report. We are getting a positive reading on the manufacturing sector of the Purchasing Managers Index, the PMI. Neutral on the services sector. And then retail sales is giving us bullish. CPI is giving us bullish. PCE. So pretty good inflation data supporting this narrative outside of the PPI. So that's actually going more towards the bearish. And then we get over to the jobs numbers, positive rating for employment change, but negative on unemployment. So you add all those 1s and 2s and -2s and -1s, you add all that together, you get a bullish score of an 8. So that's a really strong bullish signal. So now we just got to time the chart, right? So yeah, just going back over to pound yen to answer your question, and we'll look at the technical side of things now. Since pretty much Liberation Day here in the States, right? Whenever all the tariffs got put on all the countries, this thing's just been going up. So obviously we got to this point, we had some sideways price action for a couple weeks or so, and then we dropped real hard. Well, that drop came on August the 1st. Can anybody tell me what happened on August 1st? Let me know. What came out on August 1st? What report? Or speech? Or just big event? What happened on August 1st? We'll get back to that in a second. But after that event came out, price dropped like crazy, but then turned around and rebounded, and now we're back in a sideways trend. So that's just a little bit about the context of the more recent price action. So let's go back. I just want to check one thing real quick. Okay, yeah. I was just double checking my events here. August 1st. Well, that was the last NFP report we had. The last non-farm payroll report that we had, right? When that happened, all the currency pairs just either dropped or jumped. It's a U.S. report, but it still affects currencies like the pound yen, right? Clearly. I mean, it was just a huge drop. So what happened when that dropped? Well, when price dropped on the pound yen on that Friday, it dropped right into the daily demand zone. Okay, that's, if I turn off my order block tool, you'll see that that's the last red candle before a big spike up. Okay, so there's unfilled orders typically in regions like this. This is the demand zones that I like to trade, right? The higher the time frame, the better. The daily is real strong. The weekly, the monthly, they're all strong. 4 hours strong. I like to trade off the 4 hour because it's like the perfect combination of higher time frame, higher probability, but also low enough to where, I can typically get in a trade and a lot of times be out before the weekend gets. So I try to get into my trades, my longer term trades on Mondays and Tuesdays. Now, last night was an exception. I found one that I actually got into on Sunday. I don't typically like to get into trades on Sunday because you guys keep in mind the Forex market opens at 4 p.m. my time on Sunday, right? For those of you across the pond. So yeah, I don't typically get into Sunday trades. I really don't often get into Monday trades very often as far as the higher time frame. Now, shorter time frame is a different story. I'll get into trades. It doesn't matter. 5 minute, 10 minute, 15 minute supply and demand zones. But yeah, we're talking just specifically on this. So yeah, you can see how strong these zones are. I mean, price dropped after that NFP report and then bounced and went the other way. So we're left with this sideways price action on a daily time frame. Well, if I'm trying to trade this thing, I'm going down to a 4 hour time frame. And what I have recognized is this last green candle before that big gap up that we had yesterday. Well, yesterday for me, right? Sunday for the market open. So we had a big giant gap open. Well, that's significant because that creates a gap, a fair value gap, all the gaps you can think of. So for me, Alec, who was it that asked me that? Richie. Yeah, I'm just looking for a simple drop into that zone. So just give me a simple drop. It's getting close to there. Probably buy into the demand zone and just sell it right up here at the top. Maybe we can make a triple top. Right? So me personally, that's 199.20. 199.20 is kind of my goal. Right, as far as a buy order. But I need a little discount, just a little bit more of a discount. If you're trying to buy up here, buy up here, buy up here, well, that's buying expensive crab legs. So I like those crab legs on discount. So I just try to get a pullback to a demand zone where there's typically unfilled orders, right? The demand exceeded supply. That means the buyers won out. When the buyers win out and the price moves this hard, whether it's just a big green candle or whether it's a gap up candle, what they call a novice gap, then there tends to be people that miss this order and that are waiting for price to come down because they already saw this move. So they want a piece of the action. The big banks and institutions love seeing this too, right? So with the banks, with the huge orders that they place, they don't often get it all filled. They have to have retracements so they can continue filling their order. So yeah, that's kind of where we sit. Just wait for a simple retracement. And as you can see, Richie, I got my alert set right there, just ahead of the proximal line of the zone right here, just to let me know, scream at me, so I can quickly move over to my other broker and draw up that trade plan and get it set. Limit order, market order, it just depends. Now it's in the middle. The only thing I would want to discount on this demand zone is that it is in the middle of this higher time frame low point and high point, right? So it's kind of diddling in the middle. Kind of is, but that's such a strong gap. I'm willing to make an exception on this. I mean, that thing just gapped like crazy. So that's a good looking spot. Now that's looking at a 4. So if I'm buying in demand, the 4 hour on this is my actionable time frame. My action time frame, my execution time frame. So my lower time frame. Now I can obviously drill down into the 1 hour, 15, and all that, and the picture looks pretty well the same. Okay, there's a 1 hour candle. There's some 30 minutes, some 15. So the picture looks good. So yeah, but 4 hours kind of where it all started. So if I move up to my daytime, the daytime chart is where I want to verify my trend. Well, we're clearly in an uptrend, made a new high right there, and then we kind of came back and we're trying to make some new highs now. So that's an uptrend. But curve analysis, yeah, I'd be doing the same on the daily. So yeah, swing low, swing high. I wrap my my Fibonacci chart around it just to show me where the 33% line is, where the 66% line is. And that red zone in the middle is typically where people are getting chopped up, right? And then if you want to buy and discount, you're typically wanting to buy at the bottom end. If you're wanting to sell premium, you want to sell at the top. So I am kind of breaking my rule on this, but I just feel pretty good about that because as we're getting such a good fundamental score on it. So yeah, that's my play on that. I know that's a long-winded way of answering that question, but hopefully that makes sense to you. And yeah, we're really not that far away. So Alex, did we get you back, buddy?
I am here. The internet decided to say no more for a second there, but we are back. So I got most of that wonderful break just did there.
Yeah. Very nice. Very nice. Let me just double check. Good morning, Webb. Richie, you're on that demand zone too. Perfect. Perfect. I like it. I love it. Yeah, that's one of my top setups, actually. I mean, I got a lot of top setups today, and I think that's where I left off earlier. So I'll get back to, well, let me go over my Aussie dollar trade real quick, and we'll just take a look at that. So yesterday, right at the tail end of our market open show, I as far as the Aussie dollar, that was giving me, bullish score of a 6, okay? So that's giving me permission to look at a chart to buy. So when I looked at this chart, well, I had a 4 hour demand zone right there. So it's the last red candle down before that big giant spike up that we had on the NFP. I believe that was the NFP. Where is my calendar at? NFP. Yeah, the NFP. Yeah. So we had that big spike up on the NFP for the Aussie dollar. Okay. We had terrible jobs numbers. So we had NFP was negative. Unemployment rate increased by 0.1%, which was not bad at all, not horrible. Let's see. But the average hourly earnings. I'm just looking at my calendar, guys. Sorry. Yeah, non-farm payroll. So that was obviously the big ticket item. So yeah, price jumped up like crazy. Well, people get left in the dust down here, and I don't know why I drew that red. It should be green. But yeah, I'm just looking for a simple retracement. So right at the tail end of our show last night, we did get that drop and limit ordered on this. Okay, because I had it just in looking at the zone itself. I mean, not only did we have a huge spike, but we left a little bit of a fair value gap. Right, not the biggest fair value gap, but a fair value gap nevertheless off of a major news event. So there would be my fair value gap if we're looking at it right there. All right. It's not the biggest. I'm trying to color it. So from this candle top to this candle bottom, right? So that tells me that there's inefficiency in this specific demand zone. That's what you call an inefficiency. Inefficiencies or gaps clearly like to get closed. They don't always, and sometimes it may take a while. But on this shorter time frame, yeah, I was definitely down to jump in. So I just simply went down and I just got in right here, like literally on the touch of this. And then as you can see, it just jumped up and closed me out for whatever it was, $218, I think it was. So I was just looking for a simple short, stop loss under this area here. Not too many pips, about 4 pips or so, 5 pips. And then I just bought it right at this area because if I'm looking at a 15-minute time frame, I had an overhead supply zone. And that's exactly where we're getting the reaction. So just real simple. As soon as it touched, I sold out. I'm like, I'm done. Thanks for the whatever that would have been, 10 pips. Yeah, almost 3.5, 4 to 1. Right, that's ideal for the way I trade. Right, I mean, I trade supply and demand zones, so I personally try to go for 3 to 1s, 3 to 1s, 4 to 1s, that type of thing. So there we go. That was a really nice trade. Great way to start my trading week. Pretty happy about that. Let's see, what else did we want to holler at? Crash. Okay, I'm just updating on a couple things, ladies and gents. The giveaway. Yeah, let's do that. Okay, one second. Okay, so yeah, looks like we're doing another 5K giveaway as far as our challenge accounts. So as always, ladies and gents, we will be passing that out probably around 6 a.m. our time. So if you would just go simply like and subscribe to this channel. This, of course, is Hola Prime TV. So just go like and subscribe to this channel if you haven't already. And then the same thing with our mother channel, our regular channel, Hola Prime. So just go subscribe to those two. Drop us a comment. Drop us a like, all that fun stuff. And then most importantly, on your YouTube bio, please make sure that you have your updated email address in there so that we know, or so that we have a way of sending you that information to get you logged into your account. So again, that's a 5K challenge. I believe the futures show right after us will be doing another. Yeah, there you go. Stay tuned after, because they'll be doing a 25K account. But yeah, you're doing a great job so far. So just keep those chats coming. Help us out with the show there, and we'll make this a good one. So yeah, there's that. There is that. And let's see here. Where was I wanting to go? Alex, did you have anything at the moment you were taking a look at before I jump into some more fundies?
All on the Eastern Front down here in Australia right now. We're just watching everything progress. If something comes up, more than happy to go over it when it does.
Okay, sounds good. Well, in that case, we'll just kind of go back over the other reports I had here. Just go back to take a look at what we had. Okay, so we went over the COT. We went over the calendar. No, I don't think we finished off on the calendar. So yeah, just another quick reminder over the calendar, guys and gals. Nothing today, almost nothing tomorrow. The first red event we have is, of course, that PPI event on Wednesday. And what is their projections there? So looks like the 0.9% previous forecasted to go down to 0.3% on both the regular and core PPI. So should that happen, then we should see a little bit of a decline in the dollar, right? But that, of course, is just one report. And as always, the economists are just like the meteorologists. They get things wrong a lot, but they still get their check at the end of the week. So there's that. So that's enough about that. We don't really have to go too deep into that since that's a couple of days away. Taking a look after after all the reports shook out, what we're left with is the US dollar dropping like crazy on the global surprise score, the economic surprise score. So a higher score, and just like my little table says over here, a higher score denotes that the majority of key economic metrics, of course, like the GDP, the PMI, CPI, et cetera, have recently been strong relative to economic forecast. And then the vice versa for a lower score indicates that the majority of key economic metrics have recently missed expectations relative to the economists' forecast. So taking a look at the dollar, we're at 30%. That's not good, right? They've increased, or they've beat expectations on 30%, but they've missed expectations, obviously, on the other 70%. So the dollar is actually dropping. I mean, this thing was at like 50% a week ago. And a week and a half, 2 weeks ago, it was about 60%. So all this recent jobs data and the inflation has dropped this score, right? So really the only ones that are doing great right now is the British pound at 86%, leading the way. Aussie dollar at 71%. And then you could kind of make a case for the New Zealand dollar. Well, it's bad for the dollar. It's not the worst. Swiss francs they've had even more misery. 83% of their reports have missed expectations. So that's economic underperformance, right? The Swiss franc, the dollar, the Canada dollar, right? I would say Japan's more neutral. 40 to 60% is more neutral. So anything under 40%, that's where it's like, yo, y'all gotta shape up or ship out, right? So yeah, you look at those, and those are the more underperforming currencies. While again, the pound, the Aussie, New Zealand overperforming. So that's a little bit of a broad view of the currencies on the economic heat map. And then if we take a look and isolate just the US dollar itself, as far as all the individual reports, this is one of my favorite little charts to look at. Now, all the dates you see denotes a report release that's happened within the last 7 days. So it's almost all bearish. You had a good services PMI number. Okay, that was a bullish score. But outside of that, you have 7 other reports that came in bearish. Manufacturing PMI back on September 2nd. Retail sales on, I'm sorry, that one was an older one. And then, yeah, you come down here. You had a couple neutral ones in the wage growth, the unemployment rate. Because remember, that unemployment rate was 4.3% on Friday. But other than that, yeah, look at this. September 3rd, September 4th, September 5th, jobless claims, JOLTS job openings, ADP, non-farm payroll we had on Friday, all bearish. So that's why we're getting the 30%. Growth and inflation are okay. Not too great, not too bad. But the jobs, as you can see, 0%, that's all this red down here. That's what's dragging down. That's what's dragging the dollar down right now. Just completely dragging it down. So, yeah, I mean, that's pretty close to being in the sell camp for me. I mean, you know, if I start seeing some of those stronger currencies that I just mentioned over here, if I can start to find some zones, maybe the pound dollar, right? Pound's 86%, right? Pound dollar longs, maybe the pound Canada dollar long, or the pound Swiss long, right? Since the Swiss is so weak. That's one of the easiest ways to get a basic idea of currencies to buy, currency pairs. Let's see here. Okay. Just trying to go back and forth between the chat there. So yeah, that's pretty much that, I think, on the fundamental data. I don't think I had any other cool charts to show you guys outside of the gold history itself. And this will be the last one. And then we'll go start looking into some pairs. But yeah, you know, the gold being bought up, being the highest increase of late on the COT report, and obviously my top setups. I mean, you can see the 50% is kind of the baseline. So it's been net long. The banks have been even farther back than this time frame right here. But we kind of had a little bit of a dip in June, but then we've had another increase. And then this last week, that COT report I just went over, you can see how much bigger that blue bar is than the one before it. The blue bar is their net longs, and of course the red bar is their net shorts. But that was just a huge spike, much like we had back here on July 25th, it looks like. So that's just doing nothing but making the case for gold and silver stronger. So yeah, enough about that. We will take a peek. Now, Alex, if you see anything in the chat while I'm going through my currency pairs, yeah, let's throw it out there, okay?
Easy done.
Yeah. All right, so let's take another look here at my. So back to the top setups. So I just went through all these last night before bed and just went and set alerts on all these. Now, another thing I like to look at when it comes to these top setups is I like to take a look at kind of the simplified score. And what this does is separates. So instead of like this one obviously shows all the economic data and all the different reports, this one just simplifies the eco score into one score. So these are the scores getting added together between the sentiment analysis, the technical analysis, and the fundamental analysis, or the eco, the economic reports. So when it comes to placing, finding things to buy, I try to make sure I've got a positive number on all three of these. So like, for example, pound Canada dollar has a -2 on the technical score. So that's basically saying it's, well, a little bit on the downside. Right? And then the sentiment analysis for the pound dollar, okay, that's not jiving up with a combination of the big banks and the retail traders. One or both are slightly, against the bullish narrative. So that's one easy way I can eliminate something that's not giving me the strongest out of all these. So if I can get a good balance, like gold has a great balance. Right? The big banks and institutions are obviously net long on the more recent COT report. The retail traders, the retail sentiment are net short. They're trying to catch the top. Right? It's the same as trying to catch a falling knife. It just doesn't work too well, does it? Right? So that in itself has given me a 3 points. So that's good. Technical, you guys have seen the charts. Gold's just been going parabolic of late, right? And really ever since Liberation Day. I mean, most of the year it's been crazy. And then obviously with the fundamental data, we're getting +4 out of that. So that's a nice balance. I like to see that. That makes it even stronger of a sentiment. And then looking at silver, it's got a +3, a 1, and a 4 as well. So really good on the markets, or on the metals, I should say. And then, Aussie CAD looks like we're getting probably one of the better scores from it as far as a combination of, the 3 different routes here. New Zealand CAD, not really getting any technical scores, so that tells me it's more of a little bit of a sideways action we got, right? So I would probably just avoid that. Strong overall score, but here's the thing. If I got all these other items on my watch list, I prefer to trade something that's got positive scores on all 3. So just a little bit of mindset, guys and gals, for what I look at. But let's just go take a look at some of these charts now. So gold.
Tiger, by the way, I've got another trade. I'm going to interrupt you there, unfortunately.
Yeah, up on it.
Cool. Back end, I think I had my screen back end, so we should be able to do something. In fact, yes, I'm getting it to speak. So here we go, and we can literally hop into it. This is it. The candle finished that entry. So this is what I was talking about before, where we can have these minus or negative risk to rewards. You can literally hop in as of this moment here. We've got quite a large, only 0.6, the exact same taper as what we had over here previously. And geez, if you're hopping in late, maybe you'll catch something a little bit better. So to go over this, what's going on, what we're looking at, why we're wanting to hop in, it give us another win. As soon as we hop in, it decides to go a little bit bearish, but I'm happy with this. We can wait, we can hang around. So we came onto the London VWAP. You can see this red going through here, this very strong line. We've already hit this once, twice, 3 times. And from this 3rd time, yes, we have had quite a large reaction. In fact, let me just go full screen through here. We have quite a strong bullish reaction. Yes, you could. We are hitting some sort of resistance up here, and that's absolutely. but we are basically battling it out between the top of the bands here and a little bit of price action structure. Now, you do have to factor in that we are very, very bullish into already. So I am looking for a move. Now, should we come all the way back down to this area, maybe a little bit more for this stop loss here, we could sit here and potentially bounce up. And occasionally we have 10 minutes, 15, half. We are on the 1 minute right now. Might be a little bit of time, but relatively speaking, I think we can hang around. Had this strong reaction, come off this VWAP. Every time it's done that before, we've just retested this area. It's only really once before. You could have also come down into this area just like we have previously, and from there brought out a new high. Now, this is the first time we haven't brought out a new high. We did break above that Bollinger Band through here. It was a very strong power move. Potentially, I was saying we come back, hit down here, and then continue to go up. Second worst case scenario, we could down here, VWAP, and continue to move forwards. But now it is going to be a waiting game. Should we get this, it's going to be a 0.64% increase in what we've already done today. We are up $85 for the day. Should we go down through here? Yes, we are to lose 1%. Yeah, we'll lose 1%. But what happens? Now, with this one, we are going over a 0.50, which is fantastic. So we can initiate a break-even rule. So if we were going through here, 0.64, if we were going for basically a 0.32, which is right here, we would be going for our break-even coming into this area here. So we just have to wait. Even if you see another high being hit here, right? Another high bit here, and maybe that might even happen in the next 2 minutes. I will still be staying in. Now, remember with this strategy here, yes, I say it's an 80%, but that is over the course of a year. And I think we talked about this last year with win percentages. You've got to play out your strategy over a long period of time. Let's not be focusing on win rates just over 2 weeks or even 1 month. Play this out. Not in the game for 5 months, 6 months, and we're not even in the game for, let's say, a year, perhaps. So we just have to wait and see what happens. But anyway, I'm going to say that's okay because apparently there's some audio issues, and I'm going to fix that up on mine now. So I'll chuck it back through to you now, Tiger.
Sounds good. Yeah, we can understand it. Just seems like it's chopping quite a bit is all. Let's get a little bit of lag down there. Yeah.
Oh, set up.
Yeah. No worries on that. Back end, yeah, if you want to go ahead and pass it on back. We are, let's see. Anthony's asking about gold, GJ, Bitcoin, and EU, Euro, US dollar. So I just went over pound yen just about 10 minutes ago, but I can definitely revisit that, Anthony. So yeah, we can take a look. We'll just get there's my chart. Okay. So yeah, I'm just going to take a quick peek. Yeah, we'll jump on gold right away. Let's do that. Go take a look at my gold chart. So just a little bit of a recap. So gold, just go back here. So you guys that have been on here most of the days with us, you know that we had this this former resistance point where it was closed at once, twice, 3 times, 4 times. And then 2 Fridays ago, we had our first close above that zone. So when that happened, my goal was to see price, break out. That way I can get a retest. So going down to my 4 hour, I've got a few opportunities on this thing. I do have a little bit of a 4-hour demand right here with a really nice fair value gap with really nice volume. Now, again, that's obviously the NFP report from Friday. And then further down, I actually have I think that's a 300 minute, 360. Yeah, so a 360 minute candle here. So that's a 6-hour time frame. So 6-hour demand zone. Okay, that's where it looks the best. Fair value gap coming out. So that's another opportunity to buy gold. Okay, the first one up top, though, is 35.58. Now, I'm just looking at the higher time frames. I can definitely break down into the smaller time frames right after this. So this is just a higher time frame view, and then we'll jump down into the smaller time frames. So yeah, again, higher time frame view, 35.58, probably going to be one of the first ones. But the better ones will be down here in this area, 3,500 even, and then all the way down, retesting that breakout of the resistance, the former resistance point on a smaller time frame. That's about 34.50 area. So that's three that I have in the immediate area. So what's the case for this top demand zone? Well, if we look at this more recent swing low to the current swing high, we've got efficiency all throughout these candles. What does that mean? Well, it means each candle after has efficiency, meaning there's no fair value gaps. There's no gaps, right? We don't have the first gap until that candle, which is obviously the NFP candle. So on a swing low, this swing low, okay, you want to keep going up. The higher probability trade is on the lowest inefficiency. Well, again, we have an efficient market throughout all these candles. The first inefficiency is that fair value gap. So that right there, and I drew this up, but oh yeah. So here's the thing. So I've got two options, obviously, but this is the one I'm looking at immediately. Okay. I would want to buy in this demand and close wherever this thing peaks out at. So that's the first one. If for some reason that demand zone fails, well, got this demand zone down here. If that one fails, well, guess what? We got a 30-minute demand down here, and that's ultimately my favorite one because that's giving me the deepest discount, and it's right on that former resistance. As we all know, resistance often becomes support. Support often becomes resistance. Okay, the market doesn't always repeat, but it does rhyme, right? So that's three of them right there. Now, what happens if we go down to a smaller time frame? Well, we can take a look at this most recent swing low to the swing high. It's a 1-hour time frame. Am I getting any inefficiencies here? Yep. All the way down here. Let's take a look at this real quick. Okay. Swing low. So what do we have here? Well, a couple things. We have a demand zone. Okay. Do we have a fair value gap? Well, yeah, looks like it. Top of that demand zone candle. So the last red candle before the big spike up. Okay. The leg out candle, and then the bottom of that second candle. So there's our fair value gap right there. Okay, that's showing the difference between this candle high and that candle low, right? Inefficient market. The inefficiency closest to the origin of a strong move is going to be your highest time frame zone to trade out of. So if we're looking at this, again, on this smaller time frame, boom, it would look like that. Now, we obviously have fair value gaps all the way up this, right? There's a fair value gap. There is a fair value gap. So this is an important distinction to make. And this doesn't matter what time frame you're on. You can look at this on a 1-minute time frame, on a 5-minute time frame, on a 10-minute, a 15-minute time frame, right? Some of the scalpy time frames. But just always keep in mind, the higher the time frame, the higher probability it works in your favor. Okay? This just like anything in trading does not work 100% of the time. Nothing works 100% of the time, but it's all about probabilities. Give me 1 second, gents and ladies and gents. I'm just going to look at my chat. Okay, yeah, we're gonna get Alex back in here. We'll try with a new setup. Okay, so we're good on that. So that's basically what I'm looking at. Now, could price, well, let's go down to a smaller time frame. Let's see what else we have on this leg. Yeah, I mean, it all reigns true. I mean, you still got the fair value gap even from this top to this bottom. So that's going to be the highest probability for gold, no matter what time frame I'm on, whether it's the 1 hour, the 30-minute, the 15-minute, the 5-minute, right? Because again, this is the origin of the strong move. So we always want to buy as close to the origin as we can, because we have an inefficient market. This is an inefficient leg, or inefficient, more recent leg. So I'm loving that spot right there. But again, this is a 1 hour. And with gold and silver, the way they've been just going parabolic, it's waiting for the deep discounts just hasn't been working. Alex, I've had so many of my alerts get missed just because price keeps coming down just ahead of my zones. But the market has other ideas. Oh no, Tiger, you can't have it. You get a lot of breakout traders. There's a lot of momentum. There's just a ton of momentum. I can't say enough about gold and silver. And I'm a Forex trader, guys and gals. By heart, I'm a Forex trader. But over the last 4 months, gold has been half of my trades. I was just looking at it the other day, looking at my more recent trade history. Gold has been right at half of my trades over the last few months. So apparently I'm a gold trader now, right? So there's that. So hope that helps on that one, Anthony. Hope that helps. Yeah, you got a small time frame, and then you got a higher time frame option. I mean, to me, 1 hour is a smaller time frame. So it's all in context. It's subjective depending on how you guys and gals classify your time frames, right? 1 hour, because again, I trade on the 4 hour, right? So really anything under 4 hours to me is a smaller time frame. But I love that. I love that option. In fact, guys, I need to move my alert up, because I placed this alert down here on this one before all this formed. So thanks for that. Now I've got my alert set in front of that. And I'll probably set a limit order on this thing. I feel so good about it. You guys that hear me chat all the time, you know that I always preach, if I get price jump into my zone, whether it's a supply or demand, I want to see a bearish candle. An engulfing candle. So this demand zone, I would always say I want a bullish engulfing, or a candle with a tail underneath, right? As long as I got the volume spike. But these inefficiencies, that just makes this thing look super nice, super strong. So simple touch on that is all I really need. But I have my alert set. I'm cheap. If I see price come in a little bit, then I'll just wait and buy inside here, right? If I'm stepping away from the computer for whatever, I'm definitely setting a limit order on this, because I do not want to miss out on this trade. But okay, so that's gold. Hope that helps you out, my friend. Bitcoin. So I don't really have a reading on Bitcoin. It's more neutral when it comes to the fundamental analysis, the sentiment analysis. But let's take a look at it anyway on a technical level. So I'll just say point blank, I'm probably just like hundreds of thousands of people around the world. I don't know, maybe even millions. Well, probably millions. If it comes down to 100,000, I'm buying. Right? That's a huge discount. But it's just a very, very, very strong area when it comes to my demand zones. Because looking at this thing on a daily time frame, if I turn off my drawings real quick, you guys see that big red candle right there where we had that swing low, and then obviously the push up thereafter. So that would be my demand zone on a daily time frame. Turn my drawing back on. You can see I wrapped a rectangle around that. Now it's quite a wide range. It's about about a $5,000 range, right? So just need to refine that. So how do I do that? I go down to 4 hour. 4 hour, got a demand zone. All right, oh, actually, I think that's a 2 hour or 1 hour. I use so many time frames, Alex. Sometimes I forget which time frame I identify.
Could be like that.
Something. Yeah, so 1 hour. Okay. So that's that same daily time frame, daily demand zone, right? The yellow rectangle. But then going down to a 1 hour time frame, I've got another red candle before that spike. So that's confluence. That's the confluence I like to see. When I can find a smaller demand zone inside of a larger demand zone, that tells me I've got daily traders looking at that zone. Excuse me. That tells me I got 1 hour traders looking at that zone, right? That's confluence. That's what I mean when I say confluence. So that's strong because that just means there's double the amount of traders looking at that. Okay. People like me looking to be cheap and buy things on discount on fire sale, right? So I have an alert. Oh, actually, I don't have an alert there. Oh, my alert expired. That's why. Okay. So yeah, I need to actually put an alert on there myself. So I'm just going to throw an alert ahead of, because here's what I want to do. I want to buy the 1 hour demand. So that'd be about 101,400, give or take a few bucks. 101,500. Okay. So I'm just going to set an alert just a few bucks ahead of it. And I'm just going to throw this thing out a little farther. That way I don't forget it. And we'll just throw this thing out a couple weeks. I typically do my alerts just a week out at a time because Sundays is always my reset day anyway. So I usually go and look at the alerts that expired. Excuse me, guys. Let me get a drink of water. But I just want to take a look and see what alerts expired over the weekend, what alerts hit, what was the result of those alerts getting hit, so on and so forth, to try to keep everything as fresh as I can. 1 second. Okay. So yeah. So I'm just going to throw this out a couple weeks. That way I get a ding if somehow price comes down. That's a long ways away. So do I anticipate that coming down? Possibly. I mean, you look at this more recent price action down. Yeah, that could probably come down in the next couple of weeks. But either way, if it doesn't, then I'll just push my alert further out, another week or two at that point. But yeah, I love that mark on a technical basis. Now, if price were to drop down there today, I would probably buy it. I'd probably honestly get into this trade, even though it's not meeting my top setups parameters, right? Just because I just feel like there's probably going to be a lot of action around the 100,000 level. That's about as psychological as it gets for Bitcoin. But on the more recent price action, just to further that exercise, I'm actually going to take a look at Bitcoin here real quick. I need to see. Let's take a look at the fundamentals on it. All right, so here's Bitcoin. Now again, this is neutral, so I don't have a good reason to buy this market, but just for the context of why, we'll just take a look. Okay, so it's similar to gold, right? The U.S. dollar has a big effect on this. So if we're looking at the COT report, well, the big banks are favoring the sell side, because if we go back to the COT report, what did they do with Bitcoin over here? Okay, so with Bitcoin, the big banks and institutions, they had a minus 0.58% net change. So they added a few shorts, and then they got rid of a decent amount of shorts relative to the overall size. So they're currently 22,000, like I mentioned earlier, 22,000 contracts long, 23,000 short. So they're net, a little bit on the net short side. So So that's a bearish score, minus 0.58%. Okay. So we're looking at a sell. We're looking at a sell at the moment. Bitcoin, let's go back to Bitcoin. On a smaller time frame. And here's another thing I wanted to talk about for Bitcoin. Let me get the refreshed version of this real quick. It's the Bitcoin to gold ratio. Bitcoin to gold ratio. Let me copy it. Actually, I don't even need to do that. Let's do this. BT's. Hold on one second, guys. Sorry. Hitting the wrong chart, wrong thing. BTC USD / XAU USD. So this is our Bitcoin to gold ratio. What does this mean? Well, let's just take a look here in the past. Okay, we had this big spike up, okay, back in time. What does that mean? Well, that means Bitcoin outperformed gold, which means risk on atmosphere. What is this? And then we had this drop. Okay. Gold was favored more than Bitcoin. So that's risk off. Then we repeat. Okay. Bitcoin appreciated more than gold. So that's risk on. And now our current leg, Bitcoin is underperforming gold. Risk off, meaning be a good idea to start finding shorts. Okay, that's one simple way for you guys and gals that have TradingView. You can just type in exactly what I typed in there: BTC USD / XAU USD. Now you can do this with any assets. You can type in BTC USD / USD JPY, right? Dollar yen, or any other currency pair. Now, and I don't know. I don't know if the free version has it, so don't quote me on that. You might have to have at least like the basic paid package. I'm not sure on that. But yeah, either way, it just kind of gives you an idea of how assets, how they're performing relative to whatever else you type in. So yeah, so we're a little bit risk off. And that's, again, possibly why the big banks got rid of all those, sold on 2 of the 4 U.S. indices and the Nikkei, right? So, yeah, I'd be looking for a short. So let's go back to the regular Bitcoin chart and just take a look, see what we got. So this is our daily, okay? And it looks similar to that ratio that we just looked at. Let's go down to a smaller time frame. So we're just looking for, top-down analysis. Well, there's a supply zone up here. I'd probably include that top as well. So there's one potential spot to short. Because I definitely wouldn't necessarily want to be a buyer in here. With the way all the fundamentals are shaping out, the what the big banks are doing with Bitcoin, right? Things like that. So my initial gut instinct would be to short this. Well, where do I want to short it? Ideally, I'd want to short it high on the curve. Short or sell in premium. Sell in premium, buy in discount, right? It's the opposite. So, but right here on a smaller time frame, we do have a 1 hour supply. So let's take a look at this little price point. Okay. Had that big giant spike down on a ton of volume. So we got a huge inefficiency. Okay, we got a fair value gap. So that's spot number 1 that I'd be interested in selling on. You got an overall downtrend, right? So we have to trade in the context of the trend. If it's a downtrend, I don't give myself permission to be buying in this demand zone, which, again, demand zones will work in downtrends at times. Supply zones will work in uptrends at times. But the probability is just very low compared to trading with the trend. So yeah, I mean, this one's obviously worked out. Well, it's not quite worked out. It's about a 1.5 to 1. Reward to risk at this point anyway. So I don't even count that as a big win. But it's already been touched. It's already been mitigated. So it's old news. So I'm just going to color this thing light green now to tell me that, hey, this is not a zone worth trading. But I will still use it as a profit target, a potential profit target, right? Because it didn't go in 50% of that zone. It only went in about 30. So that tells me there still could be some unfilled orders in the bottom section of that demand zone. So if I were to short up in this area, and I just need to update this. So this is the same move, right? I'd be potentially looking to do the following. So if price comes up, we catch these unfilled orders and we short this market, but we buy to cover before that demand zone, because otherwise what could happen is, well, you get price to come down, and that's definitely going to get some type of bounce. So it could turn around and bounce it up and take away some of those unrealized profits. I wouldn't anticipate it to take it all the way up. But the point is, when you got a move that's coming down that far, you want to lock in some of that profit. So just be aware that anywhere under this line, this point where price kind of came in, right? Under that line, that's where you should see some more unfilled orders. So it could potentially push price back the other way. So yeah, I would just be buying to cover right before that. But that'll give you a nice 5 to 1, 6 to 1, something like that if you use a limit order, a limit short. So again, that's, I'm not interested in buying or selling Bitcoin, but if you had a gun to my head, I'd be shorting this market right now, because it's closer to bearish than it is bullish right now. What'd you learn, Anthony? I'm glad to help, though, whatever it was. Glad to help. What else we got, Anthony? We had euro dollar. Let's jump on it. Let's jump on the probably, arguably, one of the most popular major currency pairs, right? All right, euro dollar. Let's go get my top setups back real quick. Euro dollar is giving me a score of, where's it at? Where's euro dollar? Okay, so it's giving me a neutral score of a 2. Okay, so I personally am not interested in buying or selling this market. Let's take a look at the majors just isolated. I'm going to copy and paste my top setups just briefly so you guys can look at. This is just the majors. Now, this is whether it's bearish, bullish, or neutral, right? Okay. So as you can see, the only majors I have that are actionable, meaning I have permission to buy or sell, the only 2 I have right now are Aussie dollar and pound dollar. Okay. I have a 5 and a 7. 4 and lower is neutral. So I'm not giving myself permission to buy or sell, because if I do, then it's basically a coin flip. So yeah, at the end of the day, especially on a smaller time frame, you can obviously, go place your trades. I'm referring to me as a 4-hour execution time frame, right? 4-hour trader. I won't place a buy or sell order on a supply or demand zone there unless I have a 5 or higher or a -5 or lower at the higher time frame. Now, smaller time frames, 5 minutes, 10 minutes, 15 minutes, it's a little more scalpy, right? Or 1 minute, whatever. At the end of the day, an uptrend has to ebb and flow. So you're obviously going to get short-term downtrends, vice versa. If you got a long-term downtrend, the market's going to ebb and flow. So you're going to get uptrends, short-term uptrends. So you can take advantage of those. But anyway, just looking at the euro dollar, I've only got a neutral score of a 2. Okay. So the big banks and institutions did not like euro dollar longs. But on the opposite end of that, the retail traders are net short. So by them being net short, that gives us a bullish rating. Okay, a bullish signal. Seasonality. Okay, this is not helping our case for the bullish cause, because this, for the month of September, euro dollar typically down. Okay, typically goes down. Trend is good. GDP is negative. MPMI is good. That's the manufacturing sector. Services PMI is negative. So there's a lot of back and forth, right? Neutral on retail sales. Okay, so you're not getting a bullish or bearish score narrative. Bullish CPI, bearish PPI, neutral PCE, bullish employment, neutral unemployment, and then bullish interest. So there's just a lot of mix there, right? That could go either way. You have traders that might favor the GDP report over everything else. Okay, they're going to be selling this market. You might have traders that are just completely confused about the inflation data because you got one saying bullish, or excuse me, the PMI data, one saying bullish, one's saying bearish. So they're probably stuck too. Inflation data, they're stuck as well. Okay, you got the CPI traders that are buying, you got the PPI traders that are shorting. So that's another confusing mixed signal. And not to mention the Fed's favorite report to follow, the PCE, the personal consumption expenditure report, is given a neutral rating. Okay, so they don't really have that much of a say in this. But then, yeah, the employment numbers, yeah, a very slight bullish tint to that. Interest rates, a bullish tint as well. So it all just depends, right? It all depends on which report you favor. Maybe you're a seasonality trader, right? You're only interested in shorting this market. If you're a technical only trader, technical analysis, a chart trader, you're seeing the bullish trend. So you're obviously buying. Okay. So that's a lot of crap to have to memorize and remember. But the important thing is, at some point, even if you're just strictly a technical trader, it's still a good idea to at least understand where the overall narrative is so that you can see where the smart money is positioned and located. Well, again, it is a 2, but it's not a 5. It's not a 6. So it's too neutral for me. So I just wanted to kind of throw that context out there before we jump into the chart. So yeah, let's take a look at that real quick. So as always, I like to start off on the highest time frames. Let's get rid of that. Okay. Monthly time frame. Holy cow, Tiger. Why in the heck are you looking at a monthly time frame? Well, the higher the zone you bump into, the more probable it is to react. Okay. Let me turn off my drawings. Okay. Well, I'm not worried about an overhead supply zone on a monthly chart because it's a ways away. It's quite a ways away. What about the weekly chart? Okay, I got a demand zone way down here. Now, I've got other demand zones throughout here, but I'm just specifically looking at the weekly. So it's a long ways away. Supply zones don't really have anything affecting it as far as a clearly defined supply zone. Obviously, now we go to the day chart. Okay, we got demand down here. And look at this, guys and gals. Okay, that candle was a daily demand zone. What happened? Price bolted up. When it retraced, this is where the smart money's buying. Right? They bought at the proximal line of that demand zone. And as you can see, the rest is history. They had them a super nice trade for the daily demand zone buyers. Well, big banks and institutions like the daily charts. Right? They might go down to the 4-hour and the 1 hour from time to time, but this is it. And then not to mention the retail traders that trade on the daily time frame that know a thing or two about a thing or two, right? So that you can see how clearly that worked out perfectly. Well, now let's fast forward to where we're at now. Okay, we had a daily supply up here. Price has already been kind of buttoned into it. And then you got this daily demand down here. Let me zoom in a little bit. Yeah. So you had this daily demand here. This is a red candle, even though it looks kind of green. All right. So look at that. It's basically being squeezed between two daily supply and demand zones. So it's chop city. It's just a mess. I personally, and aside from the fact that it's given us a neutral rating, it's just being squeezed and compressed. So I need to see one of two things happen for me to get any interest in trading this market. Even though I am getting, well, actually, we'll get to that in a second. Yeah, I either need to see one of two things. I need to see price break this supply zone and close up here. and then have price come back and find a demand zone somewhere in here for a buy loan. Or, and the fundamentals will have a lot to say about this, you know, whenever we get it closer to the bullish or the bearish side. But it's either got to do that, or we got to get it closed down under this daily demand zone before a retracement back to a supply zone for a potential short sell. Well, Tiger, that's you're basically saying two things. Buy or sell. Yeah, because it's neutral, right? I don't have a play on that higher time frame. Now, this is where we can start jumping down in the smaller time frames. Well, same thing, 4-hour sideways trend. 1 hour, let's take a look at 1 hour here. Get rid of my drawings for a second. Okay. Higher low, higher high. Okay. So we've had higher lows, and actually, that's actually the first one. So here we go. So we have higher high, higher, yeah, that's a double top. Here, let's do this again. Yeah, so double top, a little bit of a double top. Price came back down. So we're just gonna focus on a smaller time frame on this last leg up, right? You get your swing low, you get your swing high. I turn my drawings back on real quick. Zong says, looking for British pound, New Zealand dollar buy at current price as it approaches H4 support, 4-hour support. What's your view on this? Zong, I'm going to write that down, and as soon as I finish euro dollar, I will jump on that. So pound, New Zealand, okay. Pound, New Zealand. Great question. Okay, so yeah, let's finish up on euro dollar real quick. So again, we're just bouncing back and forth between these zones. So we can flip on down to the smaller time frame and look for inefficiencies. We have to look for inefficiencies in this market. I don't really like the 4-hour. Yeah, looking at it on a 1 hour, you got obviously a big inefficiency here. You have a demand zone right at about the 50% fib retracement of the swing low, swing high. For any of you 50% fib tracers, fib retracement traders, okay. Obviously got that swing low, swing high. You got the 50% fib going right straight through that demand zone. So there you go. You know, that's a potential right there. And by the way, ladies and gentlemen, about 9 minutes from now, we will go on a 15-minute break. So that'll be 5 a.m. Central Time till 5:15 Central Time. So just wanted to let you all know that in advance. So yeah, let's see here. Just replying back to my guys real quick. So yeah, I mean, there's one potential trade, right? If you're a smaller time frame trader, that's a 1 hour demand zone, and then you would want to sell. And sorry, I got a lot of drawings. I'm going to delete that overhead supply since we already know that's the higher time frame. Just get that out of our way so I can clean my charts up. So I'm going to make that green because this is a long buy. Let's get rid of some of these drawings. I got too many drawings on here. Let me clean this chart up for you guys. That way it's a little less confusing. Okay, so look at this demand zone. This is as beautiful as it comes, and we've had a lot of these from Friday, right? The NFP report just made a lot of nice brand new supply and demand zones. That's why I'm so excited this week, because with the dollar going down from negative jobs data, that obviously pushed the euro up against the dollar, right? So I guarantee you there's traders right before the NFP report hit, right? That are watching this area. And then they missed out because price just jumped like crazy. So if and when price returns, you can bet your bottom dollars is going to be a handful. A lot of people that want to buy, including the big banks and didn't get all their order filled. Right? Look at this. You had this little downtrend, this little mini downtrend on a 1 hour time frame before the accumulation started to kick in, right? Big banks are buying here, let me do this. Okay. Big banks are buying in this area. Big banks are buying in this area. Big banks are buying in this area, right? Price comes up. Okay. You probably had a little bit more buying in here, albeit that's a little high on the curve relative to these swing lows, right? But in the context of everything, that's such a strong push away that automatically creates some good demand. And again, unfilled orders. There's a lot of people that missed out, right? But they're not FOMO traders. They're not up here trying to buy this market. They're waiting for price to come down. That's smart money. There's smart money in retail traders too, right? It's just, you guys all hear the same stat I do. 90% of traders lose 90% of their money typically within their first 90 days. So it's a very sad stat, but it's a correct stat nevertheless. Just is what it is. Real quick, London bells just rang. What's the move? That was the poll question. So it looks like 42% of you answered slow grind, 35% breakout sprint. So yeah, it looks like we got a little bit of a mixed bag of answers. Fake out traps, 14%. Snoozy open, 7%. Yeah, I definitely don't see any snoozing. So yeah, it looks like we're about half and half. Let me double check something real quick. Oh, okay. Okay, good deal. So yeah, about 5 minutes we'll be going to break. But yeah, that's probably my favorite move on a 1 hour time frame. Now, here's the reason I will not trade this. Okay. The reason I personally will not trade this market is because you see that red rectangle up top? That's a 4 hour supply zone, and price has already touched it. So if price hit a 4 hour supply zone, then I don't have any trust in buying a lower time frame demand zone unless it were much deeper down, like down in this area. Okay. 4 hour supply zones are typically going to be stronger than 1 hour demand zones. So so I could very easily see it cutting through like a hot knife through butter. So what's the play then? Well, for me, it wouldn't be until we get down to this 4 hour demand zone all the way down here. Because that 4 hour demand zone, okay, if I just do this, that would make me feel a little bit more comfortable. So in other words, a deeper discount, because there's a 4 hour demand zone with a 30 minute, I believe there's a 30 minute inside of it. Let's see here. Go look at this. Yeah, a little bit of a 30, 15 minute. So you have some smaller time frames within that 4 hour. That's the important thing. We're getting confluence. Getting 10 minute, 5, 10, 15 minute traders buying inside of that 4 hour demand as well. So a lot of different time frame traders. That's confluence. All we're trying to do is just put as many, probabilities in our favor. And for me, I would need probabilities. So I don't have the probabilities right here on this immediate zone that I showed. Because I basically just have 1 hour demand zone traders, 1 hour traders. I don't even want to say demand zone, 1 hour time frame traders, regardless of what your trading style is, right? Price is already touched, so I'm definitely not interested in this zone. But it is a zone nevertheless, so that's why I'm going to leave it green. I normally color my demand zones one of these darker colors of green, but in this case, I'm going to do it light green just to denote that it's not a super strong zone. I do that, and I'll do the same with this up top, right? I'm going to color that light red because now that tells me that zone's been hit. That zone's been mitigated. This supply zone, this demand zone, it's been mitigated. It just means unfilled orders have been tapped. And while it's not as strong as it was before it got mitigated, there could very easily still be some unfilled orders left. It's just a smaller amount versus before that zone got hit. So I just want to be aware of it as potential take profits. So in other words, if I buy down here, let's just push that out. If I were to buy this demand zone with confluence on smaller time frames, I would still be wanting to sell out by the time we get up to this zone. Okay. Just take my profit. Take my 4-to-1 or whatever that would be, 3-to-1, 4-to-1, 5-to-1 from here to there and cash out. So that is it on the euro dollar. I'll get to British pound, New Zealand dollar after we come back from break. Jean? Well, I appreciate it, Anthony. Top notch. I appreciate it, Anthony. Thanks for the kind words. I try. I just, I have a passion for this stuff. And I never realized how big of a nerd I was until I started this channel. So until I started contributing to this channel. So Alex, how you doing, brother? We're about to go on break, but did you get all set up? Oh, I don't hear your volume. I think your volume shut off. No volume. Yeah, okay. Well, we'll get that set up. We'll be going to break here in about 30 seconds. But yeah, chat. Like I said, when I come back, I'll answer Jean's question on the the pound New Zealand dollar. And again, we'll have a drawing for that 5K challenge account here at the top of the next hour. So right at an hour from now, I believe, and I'll double check with my back end team, but we should be doing a drawing. So again, if you have not won an account with us yet, you'll definitely be highest priority, right? If you've already won accounts with us prior, congratulations. But we're just trying to, divvy these out fair and square in the attempt of obviously growing the channel and helping you guys and gals out as well. It's always nice to have a hand up when it comes to, trading. And so that's what we try to do. We try to get you the analysis that you need. We're not a signal service, right? We're not a signal service. This is our disclaimer, as always, for educational purposes only, but this is literally what I'm trading, right? This is literally how I trade, and it's worked for me. And the goal isn't to try to be like us coaches. The goal is to take what you learn and kind of form it around your personality, figure out your strengths, which time zones it works the best for you, which analysis you like to use or combination thereof, and then go at it. So with that, ladies and gents, we're going to go on break. We'll be back here in about 15 minutes, and we'll go through some more charts. So with that, we'll be back in 15.
Hey, hola amigos, I'm Michael Keller, and I'm one of the trading coaches here at Hola Prime.
But more importantly, I'm just a regular guy who turned trading into freedom, and I'm here to help you do the same. So this is a glimpse into who I am in front of the screens and beyond the charts.
See, a strategy will get you in the trade, but mindset keeps you in the game.
I started trading back in 2012, and honestly, I lost more than I won in the beginning, but every loss taught me something. It wasn't about having the fanciest indicator. It was about mastering my mindset.
Living in Mexico has taught me to slow down, breathe, and be present.
Trading is what I do, but it's not who I am. I'm a dad, a husband, a traveler, and a student of life. And all of that makes me a sharper trader. When I'm in flow outside the charts, I'm in flow on the charts too.
This game doesn't reward speed, it rewards skill.
Listen, everyone wants to flip $100 into 10,000. I get it. But be consistent, focus on execution over excitement, risk small and learn fast. And if you ever feel lost, reach out. That's what we're here for.
Well, guys, that's a glimpse into my life, my story, and who I am, not just in front of the screens, but beyond the charts. I hope to see you in the session soon, and let's grow together. One day, one trade, one lesson at a time. Welcome to Hola Prime.
Hola Prime, trade with transparency.
Coach Richard Krugel is a leading force in the world of trading, recognized for his sharp technical analysis and dynamic market strategies. With years of hands-on experience, he has not only mastered the art of trading, but also dedicated his career to educating and empowering traders at all levels.
My $1 million advice to you would be, hello everyone, I'm Coach Richard, and I'm truly excited to join the incredible team at Hola Prime. It's an honor to be here, and I can't wait to contribute, collaborate, and grow with all of you. At the Hola Prime Academy, we empower traders by sharing strategies that actually work and deliver results time and time again.
Coach Richard's expertise spans multiple asset classes, and his in-depth market insights have helped countless traders refine their strategies and achieve consistent profitability. Known for his clear and practical teaching style, Coach Richard transforms complex concepts into actionable knowledge that traders can apply in real-time markets.
You can also catch me doing live trading on Hola Prime TV.
As a sought-after instructor and mentor, Richard has left a lasting impact on the global trading community. Now at Hola Prime, he brings his wealth of experience to equip traders with the tools and confidence needed to navigate the financial markets with precision. When you learn from Coach Richard Krugel, you're gaining more than just market knowledge. You're accessing the mindset and strategies of a trader who knows what it takes to succeed. Welcome to Hola Prime, where expertise meets opportunity.
My $1 million advice to you would be that trading requires skill. Never stop learning. The market constantly evolves. Let's conquer the markets together.
Hola Prime, trade with transparency.
Everybody, my name's Tiger. I'm a coach here at Hola Prime, and I wanted to give you a quick little glimpse into who I am, both inside and outside of trading. So let's check it out. So I've been trading now for going on 11 years, and that first decade of my trading was all about technical analysis. And really over the last few years, though, I've really dug a lot deeper into fundamental analysis and sentiment analysis, seeing how the bigger banks and institutions are trading so I can ride their coattails, so to speak. They're the ones making the money, so I've just kind of looked at trading like Edison and his light bulbs. He's went through thousands and thousands of different prototypes in order to find the one that worked. Look, one of the things about trading that people get wrong is they think it's an overnight get-rich-quick scheme. So, you know, for me personally, all the hard work was done well before I even picked up trading, and it all had to do with reading some good books. So, one of my favorite books right there, The Magic of Thinking Big by Dr. Schwartz. And as you can see on there, the chapters, best way to read this book is read chapter 2, 12, and 13, and then turn around and read the whole book. Powerful, let me tell you. And I'm sure you caught that above my bookshelf. One of my biggest things that I love doing is bowling. I'm a very competitive bowler. Bowled a lot of perfect 300 games, so they give me these nice little trophies whenever you bowl a perfect game. Got another one for an 800 series, basically bowling 3 games of 800 or higher in a 3-game series, so it's like a 250 average. Pretty good stuff, but compete in national tournaments, state tournaments. I've won a lot of them, so bowling, that's one of the top hobbies that I have. Outside of that, I love singing. I like to go and belt some tunes, whether it's karaoke or just singing in my car, some carpool karaoke. But other than that, listen, on the weekends, I love nothing more than just to hang with my girlfriend. She's an awesome, incredible woman, and she kind of balances me out because she sees how hard I focus on trading. So it's just a very good reset at the end of the long, hard week of trading to just get away, just step away from it all, go enjoy each other's time, and prepare for the next week. So that's a bit about me. Just let us know how we can help. Just remember, it's not a sprint, it's a marathon, okay? The basics of trading are quite simple to learn. It's just all the nuances that take a while to really master. So just keep that in mind. Don't overwhelm yourself. We'll take your hand. We'll lead you to where you want to go. Like I say, just one step at a time. So with that, have a wonderful day. Look forward to seeing you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm James. I'm one of your coaches at Hola Prime. I've been trading for about 30 years. Can you believe it? Seems like an awfully long time. But in that time, I've learned a lot about trading the financial markets. And I've learned the best way to trade the markets. By dawn, I chase waves, chase stocks, and sometimes chase my own sanity. Trading, like surfing, is all about timing. Wait too long and you miss the move, and jump in too early and you just wipe out. If you're a new trader and you're struggling with your trading, I think you've come to the right place. I'm really looking forward to meeting you and helping you with your trading. I'm approaching a stop street now, and I'm going to have to stop. Emergency brake if there's traffic coming. And that's one of the things you've got to learn in trading, as well as how to keep safe. And it's one of the main things that I teach in my trading philosophy is risk management, which is not taught very often. Trading is a bit like driving a car, really. You've got to have a license, and in trading terms, having a license is like learning how to trade. And once you've learned how to drive and got the license, learned how to trade, you've got to get good at it. And my philosophy is to teach traders how to trade properly using the tools and techniques that they should be using. My specialty is swing trading, and it's a bit like riding the waves. I've been a surfer for a very long time, and swing trading is not much different. You've got to find the sets and catch the right wave and get out of the way when it's time. A lot of people ask me, how did I get to where I am today? How did I learn how to trade? And how can they get to where I am themselves? I think the best answer to that is to get educated, learn how to trade. And there are all sorts of resources out there for you, including fantastic resources here at Hola Prime.
Hola Prime. Trade with transparency.
Hi, I'm Paul, one of the coaches at Hola Prime, and this is a little insight into who I am beyond the charts. I started trading 5 years ago. I made some money, sure, but I also made mistakes, a lot of them. As I progressed though, I realized it's less a game of chasing green and more a game of enacting discipline. As a coach, I try to help traders focus on the process, how they structure their approach, not just on the charts, but in their heads. Everyone wants to 10x their money overnight, right? But real growth, it comes from small, smart, and consistent moves repeated over time. Trading is a journey, so patience is always required, but I am here to help you grow, so don't be afraid to get help. Improving your success rate is what we do.
But after a day of trading or an afternoon of coaching, getting away from the ever-evolving price action of chart setups is a must, as the outdoors can reset your mind, whether it's taking my dog for a walk for 30 minutes or gently strolling on the beach after a winning trade. I never allow myself to get lost in the charts. Stepping back gives me perspective, and perspective is what makes me a good trader. I'm always looking for that balance in everything I do. And if you can achieve the same, you'll soon discover it unlocks so many doors.
So that's my deal. What's yours? Hopefully we'll see you for a coaching session soon where we can level up your skills one profitable trade at a time. I'm going to place a trade.
Hola Prime. Trade with transparency.
Hi, I'm Sam, one of the coaches here at Hola Prime. And in this video, I'm going to give you a short glimpse into my life beyond the charts. Outside of the charts, I love to cook. Anything with fresh local ingredients has a thumbs up for me. And when the weather's good, I like to go out, have a quick jog, keep myself healthy. I started trading almost 15 years ago, and believe me when I say, it wasn't an easy journey. There was a lot of ups and downs, mostly downs at the beginning, and it took me I would say almost 10 years before I could actually call myself a trader. Personally, I like to travel. I like to go to different places, see different cultures, meet new people. I also like a good spa day, you know, just sit there by a pool, relax, get a massage. You know, you can see from the screens behind me, it's just a lot of stress, a lot of digits, a lot of moving, a lot of fast moving markets. You can't spend your whole day in front of a screen. You will burn out, and sadly, you probably won't be as successful as if you just relaxed a bit more.
Hola Prime. Trade with transparency.
Hi, I'm Adeline, one of the coaches here at Hola Prime. But don't worry, I won't make you do endless push-ups, unless you are up for the challenge. I'm here to help traders build discipline, strategy, and confidence in the markets. And here is a little glimpse into who I am beyond the charts. I've been trading for 4 years, and it's been the most humbling teacher I ever had. At the beginning, I used to chase quick wins, but I learned quick losses hits hard. Trading isn't just charts and numbers, it's a mirror. It showed me my patience, my fear, my strength. Protect my capital and let the patience pay me. Because guess what? In trading, your biggest edge is you. Markets are intense, but it's just like an ice cream on a hot day. It can get messier, but it's always sweeter when you approach it with the right mindset. Enjoy the process and savor the small wins. Of charts, you can find me recharging by the beach, traveling to new places, or hanging out with my pets. I love staying active, but I also enjoy good food and music. Balance is the key. That's a bit about me. Don't forget, life is too short for just work and no play. Yes, even in trading. I'm here to guide you, cheer you on, and make sure we have some fun along the way. So hope to see you in a session soon.
Hola Prime. Trade with transparency.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live, get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts, we crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
What's going on, ladies and gents? What's going on, Coach Alex? Having fun with the technology today?
I'm praying it's going to work.
Yeah, okay. Well, so far, so good. So far, so good. Yeah, I was just kind of going over a few requests that we had, and it looks like we got another one now from Tiong, I think it was, to cover the British pound New Zealand dollar pair. So let's go take a look at that. And I'll kind of go through these a little quicker. Let's see here. British pound, New Zealand dollar for you, Tiong. So just from a 30,000 foot view, looking at the fundamental piece. Let's see here. Pound, New Zealand. I'm just looking on my other screen here. So it's a neutral score of a 2, right? So not really interested in a higher time frame trade on this. but we'll definitely look at the smaller time frames because it is given 2 bullish points. So let's take a look. So we have of late bounced into this 4-hour supply. Or no, I guess that would be, no, it's not a 4-hour. Let's see what we got here. 2-hour, let's go 1 hour. It's probably going to be a 1 hour. That's my guess. What time frame? Oh, I think I looked at that on a 360 or something. Well, how many minute chart did I look at that on? Well, it's one of the higher time frames up here, but yeah, we bounced into it. So that's a, I was looking at that green candle. Okay. So yeah, 2-hour candle, 4-hour candle, but nevertheless, it did bounce into it. So it's pushing price down. Did bounce off this lower level demand zone. If I look at that on a 4-hour, okay, so we got a reaction here, pushed up, pushed down, chopped all the way through the rest of it, but then it bounced off of a lower time frame demand, a 1-hour demand. Okay, we got this 1 hour within that 4-hour, so that's confluence. Okay, when price revisited that area, you can see it got a reaction from that one. So at this point, this one's been touched, and just color that light green because I know that that tells me that's been touched. This one, light green as well. Okay, we got a reaction from it. Excuse me. So what's the play now? Well, if you're trying to buy this in relation to the trend, we got a little bit of a, well, we haven't really confirmed this lower low yet. So we have a higher high. Okay, there's a high, there's a higher high. So are we kind of fanning out? Are we kind of getting some expansion legs, or Coach James calls it a megaphone pattern, right? High, low, higher, high. Are we getting a lower low? So we'll find out. And actually kind of learn this fun little tool that Coach James actually made me aware of. Let's see here. Where was that tool at? So many different tools. It's hard to remember where everything's at. Oh my gosh. I can't even remember where it's at now. Oh, not there. Where is that at? Bear with me 1 second. Just trying to find that tool. Here it is. Disjoint channel. Okay, so basically looking at something like that. Is it starting to fan out, right? Higher highs, lower lows. We'll just have to see. We'll just have to see. But that's kind of what it's trying to do right now, right? So big sideways fanning out trend. So that's just kind of some context I thought I'd throw out there first. But yeah, well, we've obviously had this more recent strong downtrend, okay, on a 1-hour time frame. Broke this low. We broke this low, but we haven't really closed below it yet. So I don't really consider that an actual low till we get a candle closing below this wick down here, which we're still a little ways away from. So, but anyway, the origin of this strong move is clear up here. So it's a long ways away, about 100 pips away, or actually it's more than that. But we do have a supply here. Very, very, very tiny inefficiency here. Okay, if we are looking at fair value gaps, right? You can see that's just a tiny, tiny fair value gap between that candle, and then ignore the leg out candle, but then we got the second candle. So by definition, that's an inefficiency. And by definition, that's the farthest one away from current price when we're looking at that overall down leg. So by definition, that's the higher probability sell point. But let's take a look at some other ones in the a little closer. So here's obviously a supply that my algorithm marked out. Okay, let's see what we got. So this area here, that's an efficient market. Okay. You have to look in the context of every second candle related to that candle, meaning the tops of the wicks, the bottom of the wicks, are they touching that second candle? Okay, we had a little bit of inefficiency right here. So let's look at this. So from this red candle to this green candle, we had a little bit of an inefficient market. Fair value gap. Okay. Well, what happened? Price came up, filled that gap, and then caught these basing candles, and as you can see, price dropped. Okay, efficient market. We had another inefficient gap right here from that low to that high. What happened? Price reversed, filled most of that gap and got close to these candles here, but then it went away. So we pretty much filled that gap. I would consider that filled. What other inefficiencies? Well, we got a little one here, just a little one. Okay. Not very much, not anything I would be interested in selling and trading. So we got efficient market. Oh, got a big gap here. So we got a little gap here, but then obviously we have a big gap here. Okay. So if we're just looking at efficient markets, efficient legs. So those are really the tradable ones. Now, again, the highest probability one's going to be the one way up top, but that doesn't necessarily mean we'll get there, right? If we're trying to sell this. So I think I just need more information on this, Zhong. Hope I'm pronouncing your name right, Zhong. Let's see here. Okay. Just taking a look at my chat. Take a look at my other chat here. We do have another poll question coming out. So GBP, the British pound, moves at London Open. What's live? We got Royal Breakout, just sipping tea, or tricky fake outs. So that is your options. Go ahead and let us know what you think about that. And then, yeah, we'll take a look at that, revisit that later. So yeah, that's really kind of some initial thoughts on it. I would prefer to be getting some retracements. Like I said, it's a long ways away, right? It's a long ways away, but that's about the most highest probability trade if it gets there, right? That's about your best bet. But again, keep in mind it's a neutral score. And it's actually neutral, but on the bullish side. So it is a +2. So it's just a lot of mixed signals, right? So I don't know where this market's going to go. I don't have a read on it. I really don't. I can't buy off this demand because it's already been touched and mitigated. So for that matter, I'm just going to go ahead and delete those, get them out of the way. Get rid of some of this stuff as well. Let's look at this on a higher time frame again. Okay, here's our swing low, swing high. We're just kind of dancing around in there. Yeah, this 4-hour demand's already been touched. Yeah, it's just kind of a weird, choppy, sideways market. But yeah, if we can get that close, Zhong, if we can get that close below this candle, then that'll make some of these opportunities a little more attractive. But right now, it's still just too sideways choppy, right? But yeah, that's probably the top setup at the moment. Albeit it's a long ways away. So just don't really have anything, right? Prices tend to flock towards that highest probability gap. Can it work off of some of these smaller ones? Well, yeah, of course it can. But it's just too choppy and too ugly. Hell, even if we went to a 15-minute, you have a little bit of a zone there. It's quite narrow, though. I'd be not interested in that. I need a zone to be at minimum 5, 6, 7 pips on these smaller time frames. I mean, that's just too narrow. So we're kind of left with this one here. I mean, you can look at this as a little bit of a supply. Okay, if we include that green candle, the candle after it. So that's a little bit of a supply. So if you really are wanting to get into this trade, Well, that's probably going to be your closest one. Is it the highest probability though? Not to me, it's not. But it is a supply zone with a fair value gap on that 1 hour time frame we went over. Right? It's even fair, there's even fair value gaps on the 15. On the 5, there's even a fair value gap if we just go from this point to that point, right?
Go from
so yeah.
To point?
Oh, who's that? Who's that guy?
Miracles, like I ported in, you know.
Hey, what's going on, Coach Richard?
How's it going, Tiger? I don't know what happened to Alex now. Did he get kicked off for some reason? Yeah, I've seen you guys, you were a little bit alone there for a while, so I dropped everything, put my motorbike in R for racing, and made my way to the office. Oh, gosh, and it's so hot here outside. Even my glasses are fogging up, but I'll cool down pretty soon. How's it going? I see you got a nice P&L.
Oh, it's going.
Good stuff.
No, it's going great. Yeah, it sounds like Alex got a new internet package. It's not like it just having a few challenges on it, but
okay.
Yeah, it happens. Yeah, yeah. I've already got into. He had a little winner first thing, start off the show.
Okay.
And then I closed out a winner myself on an Aussie dollar. Did that at the end of our market open yesterday, me and Coach Michael, and it just closed right at the time the show started. So nice 218 spot.
Oh yeah, that was Sunday session, right?
Yes. Yeah.
Okay.
Yep.
Nice.
So starting the week off pretty good. We went over the COT report, all the data, the boring stuff, to get it out of the way, and now we're just kind of going through some chat requests. So we went over some gold, some pound yen, Bitcoin, euro dollar, and we're just finishing up on pound New Zealand before jumping into some other alerts I had said. I know you just got into the office, but is there anything that you had going on at the moment?
And I literally switched everything on, jumped in, started streaming.
So, no worries.
Maybe if you want to just go ahead there for 2 minutes or so, then I'll
just that's fine. No, I got plenty to share.
Really, it's just that I need to just my ducks in a row on this side.
Yeah. And just a reminder for everybody in chat, if you have not yet won an account, we will be giving away a 5K account here at the top of the hour. So about another 29 minutes, I believe. Nice. I believe it's about 29 minutes. Let me double check my chat. Blah, 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 blah. Okay, there's that. Okay.
Good.
So yeah, as far as I know, here in about another 29 minutes. So if you have not won an account, please do drop us something in the chat. That's how we go to check and verify names, verify email addresses are updated. But yeah, as always, just make sure and follow the steps there. Subscribe to this YouTube channel. This is Hola Prime TV, as well as our other Hola Prime channel, Hola Prime Global. Okay, just go ahead and subscribe to those. And then obviously wrap with us in the chat so that we know you're there, so that we know to go check your account, because we have to verify that you have a email address in there. Okay, email address, that is absolutely imperative so that we can filter you through our system to make sure you're eligible. Right, so definitely go and do those 3 steps right there. You guys are doing great so far, but yeah, just get that done, and then we'll be picking a winner here in the meantime.
Isn't it the start of the Grand Prix as well today, right?
Yes. Yeah. That Grand Prix challenge is running from today through Friday.
That's right.
So the deadline to sign up for that would have been yesterday on Sunday. So those of you that did do that did enroll, just check a look there on your screen. You can see the prizes that we're playing for. Top prize is $5,500, cold hard cash. Second place, $3,500. Third place, $2K. as well as a 100K challenge, a 2-step challenge. And then obviously you got finishers 4 through 10. Looks like you're going to be blessed with a 25K account, 11th through 20th, a 10K account for the MT5. So that's a look at your prizes. We will be running this again through Friday, so 5 days, just kind of a way to add a little pizzazz to the trading week. But yeah, the top 20 finishers will be winning a prize, and we'll definitely get you featured on our socials as well, get you a little bit of airtime. A little bit of attaboys, a little bit of bragging rights, attagirls, right? So,
yeah, guys, everyone
good luck.
in the chat, if you haven't won one of these prizes yet, I mean, this is also a great opportunity to win real cashes, all right? And those accounts that Coach Tiger was just talking about. So please, if you haven't registered yet, today is the first day starting that off. So, yeah, go and do it. You've got nothing to lose, right? And everything to win.
That's right.
Cold hard cash.
That's
nothing wrong with that. So, yeah.
And then
trades. Follow those steps, register, or just, attach your email to your YouTube bio. Then maybe you'll be today's lucky winner if you haven't won yet, right? So it's not that difficult. Just follow those things. Most of these guys in the chat have all won before, so it might be your lucky day today.
Yeah, possibly. But yeah, as far as the Grand Prix, that's right. As far as the Grand Prix, just keep in mind you got to stay under a 7% drawdown and under a 3% drawdown for one 24-hour trading day, right? So that's really the extent of the rules. You can trade whatever style you like. There's no rule against trading the news. Okay, it's dangerous, but hey. This is a 100-meter sprint, right, of a week. So
you got 5 days. You might have to break a few rules, not break rules per se, but take a bit more risks.
Yeah,
trading their news.
Yeah, just for fun, right?
It's a tight race, and and register on our Discord if you haven't already. I'm just gonna pop out for 1 minute. I just want to get a glass of water so I can settle, then I'll be back.
Yeah, no worries. Ladies and gents, so we've went over gold. So what do I have outside of that as far as my top setups? And I'll just take a look at some of my stronger setups right off the bat. So we'll just take a quick peek here. Keep in mind, we've got gold number 1. So Aussie Canada. Okay, Aussie dollar, Canada dollar pair. That's giving me the same bullish score of 11, very bullish score of 11 as gold. So let's go take a look at Aussie CAD. Aussie CAD. Okay, so here's our daily time frame. Now, it's important to note that we have bounced into a daily supply zone. What's that red rectangle inside? Well, that's going to be, I think, a 4-hour. Double check that here real quick. Yeah, so 4-hour. Okay, let's turn off my order block tool for a second. So it's that last green candle before the big move down. And then and that's in the context of a daily. So that's confluence. This is my favorite confluences I love to see. Because the probability on these things is awesome. Because you got institutional traders looking at it. You've even got daily retail traders, right? There's retail traders that trade the daily time frame. Okay, they're looking at that. And then you got the same with the 4-hour. So again, the higher time frames are the best. They're the highest probability, right? Institutions are playing in these time zones. So if I see a 4-hour inside of a daily, those are typically what I would want to be trading out of. Now, obviously this one, I wouldn't be, we're not getting a sell signal. We're getting a bullish signal. So that's why price is chewing through that 4-hour demand like it doesn't even exist, right? I mean, it went to the top. You still, even this is Aussie CAD.
I see. Cool.
Yeah. So this is a very bullish score of 11, which is the same as gold. So this is my strongest bullish currency pair. But yeah, so that's why zones don't work out a lot of times whenever you got the economic reports going against it, right? So yeah, that's not a surprise at all. So I only want to buy this market. The problem is it's chilling in that daily supply. So I need to close above it. If I'm to trade this market, let me go down to my 4-hour again. Okay, well, before I finish that part, as far as my demand zones, I do have one right here on a 1 hour. No, this 30-minute. So I got a 30-minute demand zone right here, right before it bounced into those overhead supply zones. But as much as I love the volume that came out of this from the NFP candle on Friday, again, this is just a 30-minute time frame demand zone. Well, I'm going to take a daily and a 4-hour, the strength of a daily and a 4-hour supply zone over the strength of a 30-minute demand zone any day. So the only way I would possibly trade this demand zone is if I can get price where it's at now to finish and close above the daily supply, and then come back to collect unfilled orders and then buy to the long side. Okay, that's just one example. That's just one projection. Well, at this point, the 4-hour supply, as you guys know, I normally color it this color a red, but because it's already been touched, I'm going to lighten the color. Oops, I did the wrong one. That just tells me it's already been already been hit. It's already closed above it on a 30-minute time frame, 1-hour time frame. But yeah, I don't want to. If this 30-minute demand has the power to close above the 4-hour and above the daily, that's strong enough for me to consider buying. So that's what I have to see. If I get price come through now and just come down to the zone, I've got no interest in buying it, because the higher probability is that higher time frame supply is going to push through the lower time frame demand. Okay, and then the same thing, you got even a smaller time frame demand down here. So I've got no faith. I've got no faith in that demand holding if price just comes straight back down now. Yeah, that's probably my favorite currency move right now. But again, I need more information, and I'm just going to delete this one down here. Need more information on that. So that's Aussie CAD. Well, it's nearby cousin New Zealand CAD is a 10, so it's just 1 point below. Go look at New Zealand CAD real quick. So same thing. Okay, it's bouncing in higher time frames. So look at this. So this is something I thought would be cool to show. So we got a green 4-hour supply zone inside of a daily supply zone. What the heck is that big ugly orange box?
What is
a weekly?
What is it?
It's a weekly. It's a weekly zone. Look at this. Look at this inefficiency. Look at the bottom of that. So that's a 4-hour supply zone. I mean, a 4-hour. I'm sorry, a weekly supply zone. It's ugly because it's in a big sideways choppy zone. But look at the bottom of that. And then we got the leg out candle, and then we got the top of this candle. So that's quite the inefficiency right up in here. Okay, it's a fair value gap. Yeah, fair value gaps are just as important on the weekly, just as important on the monthly, the daily, as they are on the smaller time frames. Right?
Acceleration.
That's a pretty strong acceleration gap. That's right.
There we go.
That's right. I forgot, Chad. I've graduated. Okay, I've graduated to the acceleration gap tool terminology now. Good call on that. All right, so don't really see anything on the monthly. Yeah, you look at this thing on a monthly chart, and very, very slow grind down, I guess, but just a lot of wicks, a lot of chop, a lot of wicks, a lot of sideways chop in this area. I bet you if I turn on my master pattern indicator, yep, we're getting these orange boxes on the weekly. Now we've broken through. and we're kind of coming back into the zone. So if this price point were to get up to this 50% line of these contraction boxes, okay, that could be potential reversal, potential support when it's already done it once. See right there. Okay, so just real quick for anybody that may not know or may not have heard me explain, okay.
Is that NZD?
You get contraction box. What's that?
Is that NZD CAD?
Yes, NZD CAD.
Right.
So yeah, you get contraction box. Yeah, NZD CAD. Yep. So yeah, higher time frame stuff, but contraction boxes, we typically get expansion legs up, expansion legs down, right? The whole fanning out thing. The megaphone patterns, as Coach James calls it, right? So anyway, just for context, we're looking at that. But that's why I have that orange candle, because that orange candle is around that weekly supply. Now, price didn't go that far, but it's still, look at the inefficiency, right? The acceleration gap. So essentially what that comes down to is, like I said, 4 hours supply within a daily supply within a weekly supply. I'm afraid to buy this market. So same thing that I just said on Aussie CAD. Oops, I didn't mean to do that. Same thing rings true here. I got to see more information. I got to see price. I got to see price continue going through and close on the other end of that weekly, or at least the daily. At least the daily, but preferably the weekly, before a retracement back for a buy to the long side. Now again, that was on the, yeah, that was on a 30-minute demand. Okay. Beautiful 30-minute demand zone candle. And it has actually blitzed through the 4 hour. Okay. It did go through the 4 hour. Now it had an initial reaction, but it stayed up. So because it closed above the 4 hour, well, hell, I may still be interested in taking a position. I just probably wouldn't want to be putting a full position on. All right, maybe cut the risk in half or in a third or a quarter, a quarter of your risk, right? But here's my thing. New Zealand CAD, albeit it is giving me a bullish score of a 10, it's one of the stronger ones. There's so many items I could be trading. I'm getting a lot of good scores. A lot of scores of 6 or higher, right? Minus six or lower, I've got a couple of them. Now remember, -5 or lower is bearish, but give me at least a -6, -7. It's a little stronger. Same thing with bullish, right? 5 is a bullish score, but I prefer at least a 6 or a 7 just to get the strongest probability in my favor. Not guarantee, but strongest probability. So, but yeah, that is a potential play. So what's next on my list? Aussie yen. Let me double check the chat real quick. Okay. Just getting updated on that. So yeah, Richie, hope that helped on New Zealand CAD. But yeah, going back, we got Aussie yen is giving me a bullish score of a 9. And if you guys and gals have any other pairs that you're wanting to see while I'm in the middle of mine, don't hesitate. Let me know. I'll be happy to switch over. Yeah. I'm just doing these. I'm just currently doing these from strongest bullish ones I have. I'll go look at my 2 bearish ones, and we'll just kind of progressively go towards the middle. All right, unless you guys and gals have anything you want to throw out, so just let us know. But yeah, Aussie Jap, Japanese yen, again, that's a bullish score of a 9. Let's go look at the higher time frames as always to start. Overhead, we do have a daily supply, and then we have a red rectangle, so that would be a 4 hour, I believe, buried within. Now that's a little bit farther away. Yeah, 4 hour supply. So a little bit of confluence. The 4 hour zone starts a little bit outside of the daily, but that's okay. In a situation like this where where the lower time frame zone is, coming out first, if I were to get into this trade, I would probably just wait for the daily line itself. You stupid thing. Hold on a second. right? So I would just, if I were to short this market, just give me a pullback to the daily, because the initial part of the 4-hour daily confluence. So I just would prefer to wait for that, because right at the start of the daily, well, we also have the 4-hour. So it just increases the odds is all, right? That's just the way I would do it. Okay. But again, this is a bullish market, so I'm not even going to be selling. This is buy. All right, so we had this big move up, bounced into this supply zone over here. Price came back down. We had our Friday NFP report come out. Price slammed down, but then the buyers stepped in to mitigate that loss. And then the last half of the trading day, the intraday session on Friday, we just had a little bit of a contraction right here. Well, it's a pretty good starting point, because Sunday open, we gapped up. Okay, we've pierced through the rest of that. Well, we pierced through this high right here. So yeah, I like that whole range. I like 4-hour, 2-hour, daily, 1 hour. Yeah, I think the 4-hour candle probably looks the best. So I just need a simple buy, a simple drop to that spot. Okay, that's a huge inefficiency or acceleration gap, right? You don't see a candle there, but it doesn't matter. Just so you guys know, in case you've never formally been told, right? When you see a gap where there's not a candle, just pretend that's a big green candle. Okay. Just pretend. Just pretend. Yeah, because it's the same thing, right? There's no difference. Okay. Just pretend that's a big green candle. So if that's a big green candle, then yeah, depending on the time frame, we just wrap a rectangle around it. I mean, you can do the same thing on a 1 hour. All right, there's my 1 hour candle. You got confluence because you got a 1 hour inside of a 4 hour. You got efficient market all the way up, because this is the bottom candle. You skip over to the second, and that candle comes down and touches it, right? So we got efficiency. We got efficiency up through here. This is the first point where we have no efficiency. Inefficient market, right? There would be our fair value gap. It's also called a novice gap. Also called a acceleration gap, right? There's a whole bunch of different terms, but the point is we just got to close that gap, find some unfilled orders underneath, and then we're off to the races. Mm-hmm. So that would be the optimal spot right here. And I've got an alert set. I already had an alert set on that. Give me a drink of water real quick. Richard.
Looking at crude oil, yeah, crude oil's getting quite a jump higher. Did you get out of that trade on crude? I think you closed it on Friday, didn't you?
Yeah, that's the one. I think I got $1 profit.
Oh yeah,
yeah, that was
all right. Yeah, we ended Friday with I think. Gotcha.
Yeah, because all three of us got out of our trades right before the NFP, and yeah, so I had a small drawdown on Nikkei for like $20, I think, drawdown, and then yeah, plus $1 on the oil.
That was at least it was something.
Yeah. Okay. Well, yeah. Looking at oil though. Okay, we got a 4-hour supply here, which is currently in. Ooh, might have to look at this a little deeper here in a second. That's 2 hour. Oh, I'm sorry. That was a. No, that is a 4 hour.
Is that it?
Oh, okay. Let's take a look at this. Let's see what daily we got.
When you're done looking at that, then I can switch to my. I also want to share what I'm seeing. So we sort of seeing thing
on oil,
different techniques. Yeah.
Yeah. On oil, you said.
Yeah. WTI.
Oh, okay.
Crude oil.
Yeah, I would just say let's go ahead and flip on over to yours.
Do that now. Okay, cool. We can do that.
Yeah. Back in. Let's flip over to his. I'm going to take a look at it on a few time frames while he goes over his market geometry.
Yeah. So simply put, I try to swing a pitchfork or even a channel downwards using this high that started on the 2nd of September or ended on the 2nd of September. But I mean, it's been such a steep drop. It's difficult to find a nice angle to change the price action to the downside. So just to demonstrate what I mean by that, I mean, I can do that, but see, prices sort of left the boundaries of it. It's not really containing price action that well. That is not unusual during very fast that price will, undershoot or overthrow some of these lines. I could probably go and mess around with the type of pitchfork. That is probably a modified, yeah. Let's go to shift. And you see shift doesn't really hold it either, Let's see what happens if I double it up, which is something I generally like to do. Then, yeah. This move to the downside here missed that lower end here. So your modified pitchfork is probably your better setting. That being said, you can always use the 3 most prominent anchor points prior to a decline as well, which is what I first had on my chart here. Doing this and that, and then sloping the pitchfork upwards by changing its setting, right? So to do that, you'll probably have to go to the rating, and there we go. That looks a bit better. Why? Because price moved down below the cent median line over here. Tested a few times, 2, 3, 4, 5, nearly 6 times, and got rejected. Where did it drop to? Remember that stat I told you guys before? Quite often have a reversion to your center median line about 80% of the time. And also, price tends to play ping pong between your center median line, lower median line, your center median line, and your upper median line, depending on which direction price is, in this case, obviously downwards, right? So, yeah, I did underthrow it a little bit here, but that sort of is a nice, how can I say, catch or area of resistance, although price, or support, sorry, although price undershot it a little bit too bad, right? And now where's price again? Very close to that center median line. And I just want to know, are you following WTI or US oil on your chart?
U.S. oil. Well, as far as trading view goes, it's U.S. oil, but I mean, they look very similar.
4 hour. I just want to see. Yeah, they will look similar. It's maybe the prices might differ a little bit. The actual current trading price, and that sort of stuff. Because what I'm looking at here, if I have to switch to a 4 hour time frame, this will obviously be of interest to me for a potential short. Maybe,
yeah, I know. I'm thinking about it too.
Maybe like an intraday type of, scalp to the downside. They've already been up more than 2%, so that could potentially work in your favor as well. It's not unusual for WTI to move. I mean, it can move even more than that on a given day, which is thinking, be running out of steam. It is very close to the center median line, which acted as resistance prior. And I think you were looking at this, right? As your supply zone.
Yeah, that's it.
That previous candle there, right? So I'm just trying to, So, like you've been saying, price might get into your zone and immediately start dropping lower. I would ideally like to also trade from that zone, potentially a short. Again, maybe have a bit more confirmation, get a rejection from. But ideally, for me, it'd be nice for price to make contact with that center-median line
Yeah.
first, like it did on previous occasions. Then maybe on a 1
Yep.
hour, or like you also like to do, Tiger, if we get some reversal, maybe increase in volume downwards or whatever, you know, and maybe that could present itself as a trade. That's why I ask. Look at WTI, and yes, you also do have that supply. So that's pretty cool. Just from a little phase perspective, this is like obviously a first wave lower and wave up. Now, this was either a third, a fourth, and a fifth, and this is it now. It's going to do something like this, and we're completely wrong about it. Or maybe we're still right, and we at least get a little bit of a drop, and then another move up. Because after 5-wave sequence, you generally get a retracement, right? Or got a wave, first wave, second wave, and this is all impulsive, like a third wave, fourth wave, and then a fifth wave. Obviously, this will give a really nice swing trade to the downside, assuming that price could take out these lows around 61.19, 61.20. So Friday's low straight to the strong rally. What I also like about this is if you, let me just go label this. If this is a, let's say, a fourth wave corrective structure, right? Then fourth waves typically retrace 0.382% of your third impulsive wave, measured from the end of the second wave to the end of the third wave. And see, price is right there at the moment. That's just a general behavior of fourth waves. Now, ideally, it would have been nice if we have, you know, a little bit more of a zigzag type of behavior, like corrections typically behave like. But now we just have one straight move upwards. And because of that, that's making me a little bit wary that, you know, is this a fourth wave correction, or is it still got to do this? Oh, come on, man. Like this. And then move lower. I think that's definitely a probability. So just basing it on your supply zone that you have there, as well as that center median line. I think, yeah, maybe a small term day trade might be on the cards. Maybe even, you know, if you wanted to hold it a day or so. So very interesting. I'm going to set an alert slightly higher up and slightly below that center median line. Crossing up, right? And maybe adjust slightly lower and see what happens. See what happens. Yeah, so Tiger, sorry for interrupting there. I was just, you know, wanting to know your thoughts on WTI. And
yeah.
That, you know, I'm spotting a opportunity, and it so happens it's right in one of your zones, which is cool. Cool to see.
That it is.
Guys, is it time for, you know, that time, Tiger?
Oh, yes, it is. It sounds like.
Do you want to announce? Should I announce, or
go right ahead, my friend?
We have selected a winner, guys. The winner of today's 5K Forex Challenge account goes to Richie Trades. Congratulations. Winner of today's 5K Challenge account. You see, it was as easy as that, right? Simply follow the steps that we talked about quickly, and, you know, as easy as giving away these accounts left, right, and center from time now. If you haven't won yet, you would still like to win, join us again tomorrow. I'm sure there will be another one to be given away, and there will also be, I believe, $5,000 futures account away to your futures. So there we go. Richie Trades, congratulations. Your 5K challenge winner. Right.
Yeah.
Just quickly, trades.
Richard, I'll be right back.
That you also, no,
I'll be right
that
back.
you
boss.
please go and yeah, I'll see you soon. That you please join our Discord channel if you haven't done so already. And you need to go to the hashtag section of the Discord server and make sure that you follow the steps on there to claim your account as well. So it is necessary you also follow those steps if you want to claim your 5K challenge account. Again, congrats from my side, from the team at Hola Prime. Yeah, enjoy your account. We'll be reaching out, I also believe via email, with your account details to get you all sorted out. All right. Hey, James. James says he's short 60 to 80. Yeah, James, I don't know if you were watching here. I think we're all sort of on the same page here, thinking that we need to short crude a little bit. I think Tiger just stepped out quickly. He'll be back very shortly. And guys, maybe heads up there in the chat, or let us know in the chat who's joined our Forex Grand Prix competition. Let us know. Which is currently happening right now from today until Friday. Well done, Richie. Congratulations. You're more than welcome. And Richie, tell all your friends and family about our Hola Prime TV channel as well. Share it with everyone you know that might enjoy trading as well, or that's like-minded traders. See if we can grow this channel a little bit more. But who knows? Maybe they can win an account as well. Good stuff, good stuff. Richie, let me know that, and Fongzi as well, and Anthony, have you guys signed up or registered for our Forex Grand Prix challenge that's currently running? There's still some time, guys. It's running from today until Friday. Some real cash prizes up for grabs as well as other prizes, smaller prizes. I believe the first 20 traders will also get random prizes, right? The first top 20 or something.
Mm-hmm. Top 20 it is.
So we'll start with the $5,500 challenge account, right? Correct. Trading method 5, I believe. So the first try place will win $5,500. And it's just a great way to show trading strategy and maybe even snag some cash prizes. So the competition, again, guys, kicked off already, but registration's already open. So that ended yesterday, right? So again, the first prize will be $5,500 cash, second prize $3,500, and the third prize $2,000, as well as a $100 two-step MT5 challenge account, guys. So you're basically just gonna follow some rules that's set out there. All the rules are available, I believe, in Discord. So please make sure you do go register for that if you haven't done so already. I think the maximum drawdown is 7 of your account with a daily loss limit of 3%. So guys, it's pretty straightforward. Log in, navigate to the competition tab to go. And if you're lucky enough, top, you'll also get some nice rewards. Shout out on our social media accounts, guys, so that's really cool. So if you're looking to add a little thrill to your trading, this is your chance. Go and check it out, and who knows, you might be, or you might just find yourself on the podium. See you there.
Yeah.
Go to our Discord channel, go and sign up there, register, and give it a shot. Got nothing to lose, everything to gain, and it's good exercise.
Everything.
Right?
That's right. Good stuff. Gonna have some fun this week. Richard, I was just gonna let you know I got a ton of ton of high bullish scores after the NFP report shook out. We'll take another.
Okay.
Whenever we get back over to my chart in a minute, we'll take another quick peek at the top setups. On my gold here. Yeah.
Do that now, Tiger.
Back
We'll
in.
switch to your charts quickly and back in again. Okay. We'll be back now.
Sound.
Let's switch to your
Awesome.
charts.
All right. Yeah, back. There we go. Yeah, so look at this. So, Richard, I don't know if you remember, but last week I didn't have a ton of exciting items. I had a lot of fives in the middle, remember? Yeah, so after NFP shook out, we got a lot more strong bullish. A lot more strong bullish. So obviously gold's still at the top, but yeah, tied with Aussie CAD, which we've already went over. New Zealand CAD, Aussie Yen, I've already kind of went over those. 9 scores of 9. So pound yen, and then silver's right there with it, and pound CAD. So those are the three we can actually take a look at those now. But before I do, I just wanted to go back to that oil because it is in my 4-hour zone, like what you pointed out as well. I'm trying to find some confluence on a smaller time frame, though. So if I go to the smaller time frame,
I see James is short already. 62.80.
I need to go to WTI, not US oil. We had a little contraction there. Let's see here. Not really much of a fair value gap at all between that wick and that wick. So at least not on a 1-hour time frame. Let's go look at some smaller time frames. I know I found one in there somewhere. I think it was.
Tiger, if you look at that low on the 27th of August, that was obviously a previous low. And then if you look at those lows being tested on the 4th of September, so previous low turned, or previous support turned resistant type of vibes as well. Could potentially be.
Yeah.
So, I'm interested actually in short here.
I'm thinking about just pulling the trigger too, because I mean it did hit a 5-minute supply. So here's what I like about this. So this is the best confluence I found. So we had a nice, very small time frame, but it's still a little bit of a gap, a little bit of an inefficiency right there. Between that, after that 5-minute supply, we had that leg out candle, and then obviously inefficiency there. So it's kind of it revisited the gap and then kind of dropped, but did not yet touch the supply ahead of the gap. So that's currently where we're at. So I am probably going to get into this trade as well, because we wicked into that supply, as you can see, once, twice. Made a little bit of a low point here, not a big one, but enough nevertheless. Okay, let me think about this. Down.
What is the top of
down.
that zone of yours? The level was.
Up here?
Yeah. The top
60. Yeah, so that's the distal. That's the distal line of the 4-hour zone. And then we got the 5-hour or the 5-minute. Yeah, 63.20. And this is WTI on TradingView. So what would that be over here? On GUI trades, it'd be about 63.19. So pretty close. I mean, they're pretty close. Not an exact match, but pretty close nevertheless.
If you guys want to share my screen quickly, I can do that.
Yeah. Back over to Richard's screen. Back in.
I become grossly unprepared today, but that might be a nice little trade. Are they sharing my screen? Yeah. Okay, cool. So I'm going to place my stop at 63.25. I'm just going to, just for now, have a 1-to-2 risk-reward ratio here. So that's going to be one lot, making sure that my risk is not too high. Let's up it a little bit. Let's make it $50 or so. So risking about 55 to make 110 plus minus, right? So that'll be double. So just making sure everything's fine. I'm just gonna hit market order. Selling 1.2 lots. There we go. So I'm in. I'm actually gonna place the stop slightly higher. Let's make it 63.30. It's still well within my risk parameters. Again, I don't know if it's going to get there, guys, that low, but this will probably be something that I would like to monitor for the remaining of the day. If we do get a move lower, let's say towards maybe 62.50-ish, if it goes that low, then I'll probably, you know, either take some off the table or perhaps even pull the trade or whatever. Again, I came here very unprepared. I generally like to plan for at least an hour and a half or so before we start these sessions, but that is it, guys. Trade setup. I'm with James on the short side, and Tiger's also, his butt's itching as well to get short there, but you have to do what you have to do, right?
Yeah, my trigger finger's itchy. Yeah, I think it makes too much sense. So yeah, I'm gonna, let's see here, just throw 63.
Taking a stabby.
27. And then we got, let's see here, 63.27. So that's about 50 points. 50 down to 1. That's 3 to 1 going to that swing low. Yep. Okay, so here we go. We're going to do this. We're going to do a 50 spot there. Putting in my order as we speak. It just makes too much sense.
Ideally, I would like to have price move a little bit upwards and hit that. Obviously, that wouldn't be great for you or even me with that position, but maybe I'll add to it if we can then get a rejection from it. But we've also seen this, I mean, for quite some time now. This is a very volatile market as well, or instrument. But, you sometimes, you know, it just runs away from you. So if you're and eyeing you on the side, then you might not get into the trade. And if it's, I'm rather in it. Plus, is a fair distance away, so let's see.
Excuse me. Yeah.
Do you want to switch back to Tigers?
62.70. Yeah, let's go ahead and come on back.
Richie, are you from Namibia? Windhoek. Our neighbours. And Fongsi, Scotland. Wow.
Namibia.
From all over. Northern and Southern Hemisphere.
Scotland. Very cool.
Good to see. Good to see.
Yeah, so 4 hour. So we got 4 hour supply. We got a 1 hour supply. We got a 5 minute supply. So that's 3 time frames at least of confluence. The only thing I would nitpick on is just maybe see if we get a little bit of a break of that upward trend line.
Yeah.
That very short-term uptrend, and then sell.
Yeah, I mean, that trend line is pretty near to that area as well, so it might be a good idea if you wanted to wait a little bit. But I mean, I'm
because I think what I would,
so it's,
yeah,
let it be.
Let it be, let it be, let it be, let it be. Yeah, because I mean, here's the thing. Here's the only reason I'm being hesitant is because it's been in this range since pretty much the start of our Forex Fire session, which is, or actually, never mind. I guess that was 4 a.m., not 3 a.m. So yeah, basically the last 2 hours of sideways move. Now I'm not. That's not keeping me out of the trade, but I think part of me just wants to see price break and close below the zone and then retrace to sell. But like Richard said, these things of late have been running off and leaving me. What else I like about this trade? Well, we got negative divergence, which is looking awesome. If we take a look on the RSI down here, you're just getting some nice downward moves, right? As far as those upward spikes.
If you go
while
to,
we have upward
you say a 5 minute, Tiger. If you go to
that's 5 minute. Yeah, that's 5.
Looks like a little megaphone on the top there as well. That
oh,
is,
yeah, exactly.
Essentially completed, right? So where's that tool of yours?
Right here. Oh, we got it on GUI trades. We got it on GUI trades as well. Yeah. Yeah, there's Coach James' little megaphone pattern, right? So, yeah, so that would be.
Then, I think it might have ended, and then one more pop up. And again, on a very small time scale, not very accurate to mention this, but it could be that, it is a triangle formation, in this case a megaphone, and they typically appear during the fourth wave. So whatever lead it up to that move to the upside now and into that support zone of yours, that might hopefully be the last small correction prior to a decent pullback. So let's see. I'm not trying to jinx it. Maybe I should rip out my magnet as well, like you liked.
Yeah, well, because I could very easily see price action doing something like this as well. I mean, that's another potential. It comes up to the top of the megaphone, which kind of goes up into a little bit more of the higher time frame zone, which would be about 50% of the 4-hour zone, which is another key area, right? That's something I don't really ever talk about, but the 50% of a supply zone or a demand zone can be quite active. So that's a potential play. Obviously, a little bit longer of a time frame, now we're getting that. Now we're all of a sudden getting that. The last few minutes have been going back up. So yeah, I think I'm just going to wait a little bit. Personally, I need to be a little more accurate with that. So yeah, top of the megaphone, bottom of the megaphone. Maybe it comes up and hits this overall trend line, short-term uptrend trend line. That's another play. That might be the play I wait on, to be honest. The only reason I'm not jumping into this is because, again, it's still in a neutral territory. Oil is giving me a -2, so just a little bit on the bearish side. So definitely, gun to my head would be selling this market and not buying it. So yeah, that's all. I just think it's from a technical perspective. Give me a little bit more information, then I'll look at it. But yeah, small position, definitely not the worst thing in the world, because just from a technical level, it looks great. Higher time frame supply, lower time frame supply confluence. There's at least 3 or 4 time frames that are lining up with the supply zone itself and the fair value gaps. So that's pretty good from a technical. Love it. I love it.
What's up,
Milad? But I'm just going to leave. I'm just going to let that.
From Afghanistan. We've got people from all over the world here today. Yeah.
Welcome. What else do we want to look at here? Let me look at my top setups. I left off on Aussie yen. Let's look at silver real quick, though. I want to look at that, since that is the other bullish item I got. Bullish metal. Yeah. So it's right there. I mean, it's the same as gold. I mean, both of these right now are pretty pricey. Looking at silver, looking at gold. Everything's just parabolic at the moment, right? I know I went over this before you popped on, Richard, but currently looking at a demand right in this area here. So that 1 hour candle. Fair value gaps all over this place. Look at this. That's a lot of inefficiencies.
Yeah.
Right?
Big time.
This is all efficient market. Then you had the spike down, but then the first inefficiency, which I already drew them all out. Those yellow boxes are all the inefficiencies, just looking at it on a 1 hour time frame basis. So, the highest probability is always going to be the inefficiency closest to the origin. So just something to keep in mind. I mean, yeah, to get retested. So, yeah, I'm just basically I'm looking there. I mean, again, it's kind of pricey up in this area. But yeah, I'd be waiting for a pullback there. This is where the fib tool comes in when it comes to, this is another smaller time frame set of fibs, the 71% to the 88%. That's something called the kill zone, right? I mean, everybody hears about the 61.8. Everybody knows 50%. Some of you know 38%. But when it comes to the kill zone, what they call the kill zone, that's 71 to 88. So I'll have to figure out how to explain that. Maybe I'll bring it up again tomorrow, because I actually learned that from another, different mentors. I got a lot of mentors, so there's one or two that just swear by this, and it works great. So that demand zone is right at the bottom of that kill zone. So we just get a simple drop down to there, and then that's going to be the highest probability, in my opinion. Now, obviously, it may be too strong to get down here. So, if it were to bounce earlier, well, let's find another candle up top.
James saying that last chance for
kill zone. I mean, this is a green candle, but it is by definition a demand zone, right? So, I mean, you could make a case to be buying this one here, this little demand here. Okay, got a big fair value gap ahead of it. But again, you got fair value gap, I think, even no matter how far down we go. Yeah, here's a 5 minute. Right? 5 minute. Look at that fair value gap. Okay, that's the best. That's the farthest inefficiency away. And obviously, you got some nice ones in this area. All these candles right here are efficient because every second candle overlaps each other. Yeah, you got a tiny inefficiency here, but that's not enough for me to be interested in. That's like having a supplier demand zone that's only like 2 or 3 pips wide, right? I need a big inefficiency. So efficient. All this is looking efficient. This wick lines up with this wick over here. Efficient. That's your first inefficiency right there on a 5 minute time frame. Right there. So that's 5 minutes. But yeah, that's quite a heck of a move. That's for sure. I mean, it could, like I say, it could very easily run off of this. Yes. Well, no, this is today's move, actually. Yeah. Or well, started last night. Yeah. Last night here in the US, I should say, sorry.
Uptight B from Canada. Welcome.
Yeah, I mean, if somebody were to take a chance at this, I mean, again, this is not a bad spot. I just wouldn't be putting a full position on. I'd be putting on like 0.25%. A quarter of my risk, maybe. So basically a testing the waters trade, tiptoeing into the icy cold pool, right? Rather than just jumping in to where you get rid of the pain right away. You're just trying to ease in.
Yeah. And it's
so this is
now the question is like, how high can it go?
Yeah. But yeah, this is tiptoeing into the pool, the yellow, or you can cannonball into the pool, which would be the green, right? That's the higher probability. I'd be putting in a full position on that. or what you could do is just buy half your position here put your stop loss way down here, right? And then wait and see if price comes down and tag you in another half. I mean, there's really a few ways to play this because, again, we may not get into the position at all. It's been so strong, right? I definitely ain't interested in buying up here, though. It's way too expensive up here. So give me some type of discount. Maybe there. Maybe you do half and half. Or maybe you do 3/4 of your 3/4 here, 1/4 there, right? Or 1/4, 3/4. You can really kind of play that however your risk tolerance, makes you feel. So that's the gold. And then just finish off on Silva. Yeah, I ultimately
gold in the bit as well. So.
Oh, right. Yeah, ultimately we got a little bit of a silver demand down here, 4-hour within a daily, so real nice confluence. Do have this other 4-hour demand just above it, so that's a pretty good looking zone. This little spot here is a 300 or 360, 300. So this is a 300-minute or 5-hour demand, right? Not very widely used, but a demand nevertheless. But it's a little higher up. Looking at it in the context of this overall up leg, again, as all highest probability is closest to the origin of the strong move. So just looking at it in that context, go back to I'm just going to delete this one because I'm not interested in this middle one. Diddling in the middle anyway. So you go to the lower third, and obviously that 4-hour within the daily is meeting. Well, that's meeting my rules. You got that, or you got another 4-hour demand just below. And you even got a 4-hour demand all the way down here. All these with fair value gaps. That one is, that's fair value as well. Yeah, this one here may not be the best because it did touch just above it. It didn't technically touch it, but you got a 30-minute demand within that 4-hour. So there's even a little context on there. So there's quite a few. There's 3 options. There's really 3 good options on this. 1, 2, 3. And again, this one is kind of out in the middle, right? It's in the middle of the Hungarian flag, so it's just higher probabilities the further down you go. Pick your risk tolerance on silver. Depends on how patient we are, right? How patient we want to be.
Upti, asking about fib. Uptight B, do you mean what sort of fib level that is at?
Fibonacci.
Or,
well, for curve analysis, so I use this trend-based Fibonacci line up here, trend-based Fibonacci extension, just to look at my curve analysis, meaning where's my swing lows and my swing highs, because I want to find out where I'm buying on the curve. So this is my swing low. I'm going to click there. I'm going to click to the top, and then I have to go back and finish my click a third time on that same bottom. So what it does is gives me the top third, the middle third, and the bottom third. The highest probability buying spot is in the bottom third, right? The top third is the highest probability of selling to the downside because you want to sell in premium and buy in discount. So if I'm buying off of a 4-hour demand zone, then my curve analysis typically comes from a daily time frame. So just wherever the more recent swing low is, the swing high, and then put it on there. So, daily, weekly. It really just depends on what the price action's looking like. But weekly, swing low. Daily uptrend, which is where I ultimately drew my curve analysis. Daily uptrend, okay, and then 4 hours my execution or my entry time zone. And then I go down to the 1 hour, the 15, to try to fine tune it to find those confluences. Make sure I find a demand zone within. Make sure I find some strength on those zones with these gaps out for showing strength. So But yeah, don't typically want to buy in the middle. That's diddling in the middle. That's where everybody goes to get chopped to pieces, and right in the cemetery, for lack of better explanation. So now I'll buy in the middle, right? And you there's no rule saying you can't. All I'm saying is don't diddle in the middle. That's just some of the lower probabilities. Highest probability is always going to be towards the origin of that strong move. So long as you have inefficiencies in the market. Now let's say all these candles were overlapping as they went up. And then let's just say that zone right there would be your first inefficiency, meaning we have a gap. Okay. That's clearly that's clearly our gap, right? So we know that let's color it something else. There we go. Okay. So this red candle to this red candle. So that's our fair value gap, our acceleration gap, our novice gap, right? Because it's a gap up on an uptrend. Okay. It's all the same thing. But we have a gap here. Okay, we got another gap right there. Okay, that red candle to that red candle. So the top of this red candle to the bottom of this. We always ignore the leg out candle because that's the inefficiency. Okay, so this demand zone, which created this fair value gap, is going to be a higher probability, not a guarantee, but a higher probability than that one, because the market wants to try to close those inefficiencies. Well, then we turn around and we have another one down lower, which is the one I'm more interested in. Okay, there's a fair value gap there, and then you got a demand zone underneath. So it's always the higher probability to go as close to the origin as you can. Now, with gold and silver moving so fast, this is where it calls into question the concept of buying a little bit higher up on the curve, or perhaps even diddling in the middle, right? Because we've been missing moves. I've been missing moves left and right just because price is so strong and has not wanted to come back to my zones. Well, I say mine like they're mine. They're not my zones, but the zones, if you know what I mean. So yeah, you might just take a look at buying that zone right there. I just don't know that I'd want to put a full position on it. I'd be a little more interested in a full position on this demand zone because it's a 4-hour inside of a daily, showing me that confluence. Up here, I'd probably be putting like a third in, or maybe a third, add in another third here, maybe another third down here, or even just whatever. Again, it all just is dictated upon your risk tolerance and how bad you want it. How bad you want to own that silver, right? Did you want to show what you were talking about on the silver, Richard?
Wanted to show my gold charts. Get another perspective there, but 100% agree. Any type of pullback we can get lower down, I still think would present another buying opportunity. So we could share my charts if you guys don't mind back in, and we also got a poll going there at the moment, guys, asking if trading was a boxing match, what's today's style? Would it be Richard's jab sniper punch, Tiger's knockout swing, both playing smart defense, or the market throws the knockout punch? Guys, so please vote there. Let us know what you think, and we'll read the results of that poll a little bit later on. All right, so back to my charts. I see a lot of guys in the chat here that I do not recognize name-wise, right? So during these sessions, in gold especially, I've been tracking what I thought was during the sort of early phases, around about, when was it, mid-July, I think, Tiger, when we started with these sessions. The sideways movement that we've seen in was it 14th or 15th we started with Hola Prime TV, I believe
I think it was the 15th.
Yeah. So we, or, from analysis perspective, price obviously had a very strong bull run into these highs that, ended on the 22nd of April. And then the sideways movement during obviously a very strong bullish trend, in my mind started to look like how triangles typically behave. So this white scribble that I have in my chart here is basically the outline of the triangle that we've been following. There were some updates in between, trying to figure out in which phase or how far along this pattern was before it could potentially complete. And triangles, if you follow a little bit of Elliott wave analysis, they run in 5 phases labeled A, B, C, D, and E. So for me, this triangle ended here, and I might be wrong, but the expectation was that if it did end, and we obviously only had confirmation that it ended, when price started getting a massive move to the upside, right? And why would I think now the probability is high that this was in fact the end? I can't say in fact, but I see that it was, is because of the strong behavior to the upside. A first wave to the upside, 1, 2, 3, 4, 5, A, B, C of some sort for a second wave. And when a corrective structure ends, one would assume that you're going to get a nice 5-wave sequence again. And I was also saying that if this was indeed the end of that, and this was indeed a end of a second wave of the next bullish move to the upside, that we will need to start seeing very impulsive price behavior, meaning a very strong incline in this case that we've been seeing. Tiger was just talking a lot about the inefficiencies to the downsides with all those acceleration gaps, or some call fair value gaps, whatever they would like to call it. It's up to them. And that's typically how third impulsive waves operate, or basically their characteristics, if I can put it that way. So the expectations was there. Obviously was a little bit sort of like in doubt whether that was the end of an E wave. My mind, price would have needed to break out, and obviously now after the fact we could say clearly price broke out, right? Breaking above that high that was set on the 22nd of April, 3,500 US dollars per ounce, right? So very strong movement to the upside. For me personally, this third wave is still underway. How high can it go? Again, I like using pitchforks to track a directional move, especially when it comes to corrections. Because and why I mean that is because corrections are typically less, angular in nature. Apart from triangles, which run sideways, your more common corrections are your ABCs or zigzags or combinations of that and stuff like that. Now, you like using pitchforks. You'll see if you join us again how I use that to, especially when it comes to tracking corrective structures and where those corrective structures might end. And when it comes to a trending market, and especially a very strong trending market, it is probably the best to use the standard pitchfork, which slopes in the direction of a trend way more steeper than, let's say, a shift pitchfork would, right? You see how it's less angular, or it's not as steep angled as your original pitchfork that Dr. Alan Andrews basically used during his lifetime. So I still think this move is still underway. But one thing that is interesting is that when price actually hits these warning lines, which we call an upper and lower warning line, I call them my upper and lower red warning lines, they typically catch very extreme moves. We have a very extreme impulsive move to the upside here. So I would be surprised if this third wave could still reach, which is above today's current price, around about the 3,600, maybe even 3,700 level, right? That being said, that's just an expectation, right? Price could do whatever it wants to, but the expectation that we're going to see an impulsive move, at least that was, we've seen that, right? So what I would expect next is that as soon as we're going to start going through a pullback, could be from the current levels or higher up, that actually spans longer than these little pullbacks that we've seen here thus far, right? It takes a bit longer. That will be my cue that we're actually getting that fourth wave. And then you'll obviously see me all over this, because that will, for me at least, provide another opportunity to go long gold. And I would, in those cases, depending on which correction I think I'm dealing with, use a pitchfork sloped in the direction of that corrective structure and, try to figure out where that fourth wave might end. I'm just drawing now, so hopefully you understand what it is I'm trying to do here, before you try to get long again. And hopefully if it sets up nicely during, beginning of the week, this might actually provide a really nice swing trade to the upside. The doubt always is when prices are at all-time highs, there's no structure on the left-hand side to look at historically. So how high can price go? And that always creates a little bit of doubt, because now a lot of traders might be thinking price is too elevated, which it might be. Where should I jump in, as this first, at least this impulsive wave, run its course? How much more oomph does it have to the upside? Who knows? To any one of those questions, no one knows. So that's why I find pitchforks, market geometry really useful, especially with conditions that's at all-time highs or even all-time lows. No, there can't be such a thing, right? Because all-time lows will probably take you to zero. Just coming to think about that. So, at all-time highs, watching price behavior, I would still be interested in, let's say, taking short day trades to the upside. You can clearly see by just using those these three anchor points, the start of where this is basically where I believe the triangle ended. At first wave higher, higher high, high low, which I labeled 1 and 2. Look how well price respected this previously. We had a decline, respected this as support, try to get above it. This was last week Friday, was it? Yeah. And then boom, there we broke above it. So, I'll keep this pitchfork on my chart and not change it. Maybe it's a good idea to go lock it. And if we were to get a pullback, where would be a good area for me to get long? A retest of this angular area that acted as resistance, which I would then assume this time could act as support and do something like that. This is just a 4-hour time frame. I could switch to a smaller time frame. If we go to, let's say, a 15-minute or something like that, and we start getting a zigzag formation like this. Come on, where's my arrow now? Like this. Then great, then it's present on the smaller time frame. I know I've got this larger time frame median line that acted as resistance, might be support, and there maybe on the current 4-hour time frame, if this candle were to close in the next hour, 12 minutes from now, without moving much lower between its current low, which is at 3,608, then we'll also have a fair value gap, acceleration gap, whatever you like to call it, that could further act as support, right? So in this case, we would might, guys, because the time's not over yet, the candle has not completed yet, might have a fair value gap. We will have this upward sloping median line So a bit more confluence than just using a median. We might have a fair value gap as well. So area of interest that I'll be interested in going long gold if we can get a bit of a pullback. So while I'm here on this chart, I'm going to create an alert just to alert me or let me know if price were to move lower, maybe today or over the next few days, and see if we can get a trade going there. But gold's been a difficult one, right? So if you're not in it soon or during this very small little pullbacks, it's just going to leave the station without you. But everything can't go up forever either, guys. So at some stage, just looking at price behavior, as I mentioned, I think this third wave is going to run out of steam, and we're going to go into a slightly more, I would say longer term, but longer than these corrections, which only lasted like a couple of days or 1 day at max, right? Maybe a correction that lasts 2-3 days or something like that would be my first cue that a fourth wave during this sequence of the upside is potentially underway. And then maybe, you know, trade that with a sort of swing trading mindset rather than like a day trading mindset. All right. How are we doing on time, there, guys? We still have 25 minutes before we end today's session. Any questions on that, guys, in the chat? Let us know. We got different perspectives, but we all have the different type of bias. Well, same biases, right, Tiger? What's your thoughts in the chat there, guys? What do you think? Has gold still got lots of upside potential? Where to? How high? How far? Where are
4,000?
you interested in getting along? I wouldn't be surprised if it makes 4,000 at some stage.
Are we going? Yeah. Are we going to 4,000? Are we going to go all the way back 3,000? Where are we going? Yeah. So I mean, to me, 4K sounds like the easy answer. I mean, not easy, but the more logical answer with all this, with all the U.S. dollar reports just going negative. Obviously, we went through it right off the top of the show. I kind of went over the U.S. economic data releases, and it's just hideous. We were up in the high 50 percentages on the economic surprise meter just a couple weeks ago, and now we're at 30. Actually, Richard, I don't think you saw this. Back in, well, do you mind if I swap back over?
Yeah, for sure. Just quickly before you do, it's like this instance here, I think it's in 2012. I mean, you could look at it as well on a higher time frame. Sorry, it's back now. Thanks back.
Yeah, you're back.
I remember that was sort of in my young days, well, not young days, well, by beginner days when I started trading.
2011?
Really been trading for some time. But look how close price got here around about August, was it August 2011, to the $2,000 level, right? And I was like, everyone's like, it's going to reach it. I was like, I remember driving back from this prop trading firm that I used to work with back then. We had my own trading desk and so forth. Now, it's going to hit it, it's going to hit it. And then, look, it just fell short of it and then went into one heck of a multi-year, 2, 4,
a decade,
6, 8, 10, a decade before it actually reached it, you know? And by then people already forgot about it properly, you know, that weren't following price action. And then eventually it broke it. So, you know, it didn't have any issue breaking 3,000. Look, it just went straight through it.
Yeah, I know. That was crazy.
Maybe will it fall short of 4 again? Just tease us with that. Go through like a multi-decade or multi-year corrective structure again. It is possible because, I mean, this is just parabolic. It's insane. It's insane.
Yeah, it's got to be.
I think you'll be foolish to, and this is obviously that corrective structure we just had. I think you'll be foolish to, you know, trying to want to just short gold until at least you have some sort of technical evidence that we're getting a directional change.
Yeah, I mean,
back to you.
Yeah, because if it did that decade-long correction right before 2000, well, double up 2000, 4000. Maybe we get a 20-year correction. You never know, right?
Who knows?
That's the beauty.
Right,
I'm
so
sure.
back to you.
Like
Tiger, you wanted to show something on your side?
Oh, yeah, I was just going to take another quick peek at the dollar, at my Dixie chart, just so I can kind of go back over that data I was going over this morning. I got a lot of things on here. Yeah, just looking at this, what we let off the show with, USD's only got a 30%. 30% of their reports have exceeded expectations. So yeah, we've clearly got all this jobs data. 0%. They just changed this, they kind of separated it out. Growth metrics, inflation metrics, jobs metrics. So jobs 0. This is why the dollar is just plummeted. Right? This is why the dollar is not doing so well. So yeah, everything but one report has been bearish in the last 7 days. You had a bullish services PMI, but other than that, everything else was bearish. Everything else was missing expectations. So it's just quite the sight to behold, looking at how many things can flip bearish just in less than 7 days. Excuse me. So yeah, that for that reason alone, yeah, that's why gold just looks like it's going to continue up. It just does.
Flying.
And yeah, as far as, okay, so here we go. So on the WTI, here we go. So it got closer to the bottom part of Captain James megaphone. Now I went to the top. Okay. Yeah, I don't know. We could probably play around with it. We'll just see crude. So yeah, up here, if we get a
it's right at the median line. My alert just went off. That's why I shoot short, but it was a bit more aggressive. But anyway, let's see what happens.
Yeah.
And look at that move higher. Jeepers. When these megaphone patterns end, they typically end very abruptly and they change direction very fast. Like you typically get V-shaped bottoms and tops. And it's certainly the behavior we've seen there. So I would definitely label that as a little megaphone pattern that completes it. When was it? Was it a 5-minute time frame here on there? Was it 5,
yeah, that's fine.
15-ish minutes ago?
Yeah. Yep. Now it's just be interesting. We're getting the curl around on the RSI over bot territory. So I mean, that's some pretty strong volume coming in on that push up too. Can we get any type of similar volume candles on some bullish candles? Well, let's see what we got.
Well, would be nice.
That would be nice. That's we'll have to come back to that here in a second. Yeah, I mean, I think at this point, because now it's past the 5 minutes. So the 5-minute supply worked pretty decent for a quick 2-to-1 or so. But now that's old news, so I'm going to delete that. Get that out of my way, because now we're working off the 1 hour. So 1 hour supply. Now this 1 hour didn't really have much of a fair value gap. Just a tiny bit. Real tiny amount, but nothing to write home about. But still 1 hour nevertheless.
Well,
just seeing
if
I can find
it. That's what it does.
Yeah.
I'll be back just now. Just give me one minute. I'll be back now.
Okay. Yeah, no problem. So yeah, we'll just I'm just going to ignore that trade for now. It's just not shaping up the way I like to see it just yet anyway. Let's take a look at some bearish items. So we got CAD Swiss as my strongest bearish item. What the hell's my gold chart? Okay. CAD Swiss -9. So we're going to go take a look at that. CAD Swiss, CAD Swiss, CAD Swiss. I don't typically trade this one a whole lot, mainly because it's only a 34 pip ATR. Really, it only moves about 34, 35 pips on average throughout a day, right? 24-hour session. So kind of like molasses, if you ask me. So I just don't really trade it a lot. But we are getting a bearish signal, so let's take a look at it. Okay, swing low, swing high, swing low on a daily. Okay, swing high, swing low on a 4-hour. I'm just going to delete that old curve analysis. Let's find some zones here. Let's start with that. So I do have this supply up here, retracing this whole swing high point, swing high, swing low. So just from a quick glance, that's going to be probably the highest probability short. Okay. Now I've drawn out another supply here, so let's take a look at what time frame I put that one on. Okay, so that's a 30-minute. It's a red candle, but it's a basing candle action, preceding the fair value gap. Fair value gap out. Okay, so a little bit of market inefficiency here, but again, you got market inefficiencies all the way up. So that's the first time. That's the origin of the strong move, right? This is all just sideways chop. But this is where the sharp move down started. So if that's the origin of the move, we want to find inefficiency. Okay, perfect. It doesn't get any more of an inefficient price action than this, right? There's your fair value gap, right? So markets like to close those gaps. We all know that. We just got to find unfilled orders above. So that's it. I mean, that's the move right there, right? This is a much lower probability supply zone, but it is a supply zone nevertheless, right? In this 15-minute, 30-minute, I mean, you can look at either time frame. That is a supply zone, but the problem is not really getting the greatest. I mean, it's just not the greatest fair value gap, not the greatest sign of strength. Best sign of strength, the 1-hour supply. So that red move, that's pretty much it. I mean, if we get a break of this tipping point here, right? That's Coach Michael's favorite thing to see is W's, right? Right? Or half a bat. Well, no, I guess that wouldn't qualify as a half bat. That'd be your W, right? So if we get a break above that, and I got no problems seeing price return all the way to the origin there. So just for context, I threw that on there. But yeah, I'm going to leave this zone on here. I'm not going to be interested in trading it, but I am always interested in studying zones to see what happens if and when price does get to that 30-minute time frame. Right. This is bearish item number 1 on my list. -9. Euro Aussie dollar is my second favorite bearish item at -8. And outside of that, there's 3 other items at -5. So they are bearish, but I just like to have them a little stronger. So I'm really only interested this whole trading week, unless something changes, in selling either of these 2 items, CAD Swiss or Euro Aussie dollar. So yeah, let's go look at Euro Aussie real quick. Come on. Let's see what we got here. Euro Aussie. All right. 4-hour supply, or 4-hour, or I should say daily top-down analysis. And looks like I'm going to get rid of that for the time being. Uh, 4-hour. Let's see here. Little bit of a 4 hour there, but I think I'll be able to find something that looks a lot better on a smaller time frame. But that a little bit of a fair value gap coming out of that. Not the greatest, and it doesn't look good at all when you look at it on a 1 hour. Need my voice to last just 15 minutes. 15. Yeah, I think the smaller time frames you go down to, the uglier it looks. Yeah, I mean that 4 hour, that might be the best bet. Right? That might be the best bet because we clearly got a little bit of a gap there. Okay. So there's our gap. But I'm trying to find something that's got a little bit clearer of a picture on a smaller time frame. And I don't think I'm really seeing anything because this is all efficient price action here on the 1 hour. You had your first inefficiency on that leg out candle, but then you turn around and close the gap and caught this supply right here. Right? So price caught that supply right there on the 1 hour supply. So then it sold off. Efficient. All this is efficient. Looks like we get our next inefficiency right here. I would probably be more interested in taking a stab at that because everything's efficient from here down. The origin of this move down. Did I do that right? Yeah. So we'd be looking at basically this green candle. I'd probably include, this red candle. I'd probably be including that red candle too, just because it has a higher wick. And that would be a potential supply. Now that's a 1 hour. I'm gonna see what a 2 hour looks like. Okay, not surprising. That double 1 hour is the same as that 2 hour. Okay, so yeah, 2 hour. So basically that 2 hour supply. But yeah, the further down you go, it just doesn't look as good. Yeah, we'll stick with that. That'd be the more surefire way of getting into a trade on the Euro Aussie is hitting this 2 hour supply. So there's really two plays here, basically. There's the immediate one. Okay, lower probability. But then you got the higher probability up top on a 4 hour. So that green candle right there created that inefficiency. Or this 2 hour supply created this inefficiency. So there's two different plays there. Two different opportunities. So that's basically it on the shorts, guys and gals. I only really have two favorite options. That's it. Tis it. Let's have a look at our WTI again. Okay. Okay, we had a rejection off the top of that. About half the volume of the previous candle. So not really seeing the greatest effort on that candle there as far as the volume. Next candle after is half its size, but a lot larger. So the effort and result aren't quite matching up over these last few candles. So not really getting a good picture of a sell just yet. Okay. And really, if I'm going to sell this market at this point, I need to see a big red volume candle down coming up in this area somewhere. That's pretty much my thing. Richard, are you muted?
I think
I just
so.
noticed that. Oh, no,
Not
I
sure.
hear you now. I just heard you. Okay.
I was actually going
I
to
thought it
ask
was
you,
quite- Yeah.
because I had alerts. When was this? A few days ago, triggered. Not a few days ago, actually. Yesterday, early. Must have been very early. Your score on the dollar Swiss franc.
Dollar franc? Oh, yeah, let's look.
Yeah.
It's neutral, so let's go look here. That's going to give me a score of dollar franc, -1. So neutral -1. Yeah.
Yeah, because it's coming down pretty
Yep.
hard again. That might be
yeah.
to look at for me tomorrow during the London session.
Okay. So
is it in
daily
a demand zone at the moment? Daily demand?
Yeah, so it's in a daily demand. It did bounce on this daily supply and right at that 4-hour supply within a while back. Oh, that was August 1st. So that was the previous NFP report. We got that big ugly red candle out of it. All this sideways chop. This is a contraction box, the orange. Price kind of dipped down, came back to the midpoint. The midpoint line rejected, and that's why we're getting this push down. And now we're bouncing into a demand. So we'll see if demand can hold. Let's see here.
Can I just quickly show my chart there on the
Yeah,
dollar franc, please?
Yeah, absolutely. You can close it on out. Close on out the show, man.
I think we were looking at this last week, and it's just a really great example of what I thought was an ABC, a zigzag formation, right? And if you combine that with market geometry, look at how beautifully it hit that upper red warning line, and then that was it, right? Again, 3-wave move. And now we've been making this sort of overlapping stepping downwards move, right? So I'll get to what I think this might be very soon, but let's just quickly run a channel. Then yeah, there could potentially be some more downside. It looks like it is gunning for, or that price is gunning for these lows here. At 0.7911, that low being Wednesday, 23rd of July. That being said, we are at a little 50% dash median line. You see this this red one here? That price has just touched. Look at how, even though it caught that upper end of this move, how well prices started in respecting these median lines again, right? So it is in that demand zone of yours currently. This might give us a little bit of a bounce, maybe. It's done so previously. Look at that beautiful move upwards. Yeah. But I think, yeah, that'll be playing obviously against the trend, right? So prior to this dollar in a hectic bear market, was this the Swiss franc, right? So this downwards move here resembles to me a lot like what looks like a leading diagonal. And there's a few ways we can mark this, either 1, 2, 3, 4, and now it's at 5. Then we get a move up and then a drop downwards again. That's potentially what is happening here. Just an example of a leading diagonal that actually kicked off this move is over here. You see 1, 2, 3, 4, 5. So it's like this 5-wave movement that's very overlapping in nature. Sometimes it traces out within confines of a channel. Sometimes not. Sometimes it looks a little bit more like a triangle that's moving in a direction. Sharp type of triangle, like this. Instead of it being parallel like that, the lower end can do this. And also it happens in generally, let's say, you have a bullish market, and then you get a 1, 2, 3, 4, 5 type of vibe, corrects the structure, fails to go to new highs, and then generally this precedes a very strong directional change. And this after that potential correction that we've seen there. I think that's potentially what's happening here. So, yeah, I'll be interested in going short the dollars Swiss franc if we can get a nice pullback, maybe today, later this week. Maybe I'll just add an alert a little bit higher. I'm not going to get involved with this to the downside as yet. I would like to see a pullback of some sorts. And maybe, again, another trade idea for later this week. Right. Tiger, I think we should maybe stop it there. We got a minute left before the end of the session. I'm actually going to do the pre-market pulse with James in 15 minutes.
Oh, really?
Now. So it's all the viewers.
Nice.
Yeah. Yeah, so I was going to do that, but then I seen you being lonely today, so I decided to join you midway. So there we go.
I was having a ball.
I know.
I was having a good old time.
You got the gift of the gab, man. So you got no issues talking for hours.
I could go the whole 4, no problem. But yeah, it sounds like my voice is a little hoarse, but that's okay. I just got to toughen up, right? It'll be good.
All right,
it'll be good by quiet markets.
Pre-market pulse coming up at 7:30 a.m. Central. That's 15 minutes from now. Again, I'm going to be sitting with Coach James there, and we'll be taking it into the futures takeoff session with our futures coaches right after that. So please do stay tuned. I believe there's going to be another prize we'll be giving away during that session at 25K, right? Challenge account. So hope to see you there. So. If not, hope to see you tomorrow. Please join us again. And again, thank you today. Thank you. Congrats to a lucky winner today, Richie Trades, right? So there we go, guys. From our side, have a good one. It was a short one from my side, but nice seeing you again, Tiger.
Yeah.
I'll
all right, boss.
Very soon. I'm actually with you guys tomorrow morning again, so can't wait.
All right.
Hope we can get some.
Can't wait.
Awesome stuff.
All right, man. Have a good day. Cheers, everybody. Yes.
Hola Prime. Trade with transparency.